This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Lisa Mateo, Tom Keene, John Tucker in for Michael Barr, David Gura in for Paul Sweeney. Good to have Gura here with a political story of the week, but the news flow this morning, folks, just absolutely extraordinary. We welcome you across this nation, particularly on the West Coast with all the challenges we saw this weekend. David Gura, I got 60 Minutes. I thought that Scott Pellett and the team out at 60 Minutes in LA, they really captured the loss.
Tremendous loss. You flagged this as well. Lucas Shaw, our colleague who lives out in Los Angeles,
Great
kind of putting into context how devastating this has been for the city and beyond, and also just the entertainment industry they're in. But a lot of people suffering and trying to navigate all of this, and we're going to touch on that throughout the morning here.
Rob Carolyn with us here in a few minutes, and he'll be with us later in the morning as well. Markets on a move. The VIX up two figures, 21.47. We're really going to stay focused on the markets today, but we have the Gura world. He wouldn't have shown up if we didn't do politics. Confirmation hearings this week, and the rest. It's a packed week, even off of the jobs report that we had on Friday, that bang-up jobs report. Bloomberg Surveillance this morning is brought to you by BAM Mutual. They insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com, BAMBONDS, BAMBonds.com. Futures at negative 45. Right to it from the Interactive Broker Studios, Lisa Mateo.
And we got futures falling. This is after Friday's free fall following that December jobs report. Tech shares really getting beat up. Among the high-profile losers, Tesla down 2.5%. You have Palantir Technologies down more than 3%. NVIDIA down nearly 3%. You also had the White House unveiling these new curbs on exporting NVIDIA AI chips. That will take place in about a year. So NASDAQ futures down more than 1%, 253 points. Dow futures down 0.2%, 116 points. S&P futures down 0.8%, or 48 points. We have the two-year yield, 4.41%. That's up 3 basis points. The yield on the 10-year, 4.78%, and that's up 2 basis points. Oil climbing to a 4-month high. You had fresh U.S. sanctions on Russia threatening to affect supplies. So right now we have Brent crude, $81 a barrel, up more than 1.5%. WTI crude, $78 a barrel. Then UK-listed shares of BP, Shell, lower this morning as well. Currencies, you have the Bloomberg gauge of the dollar. It touched the highest in more than 2 years. Right now it's up about 0.2%. And then you have the euro, fell to its lowest level against the dollar since late 2022. Right now it's at 101.94 against the dollar, and the pound also weaker. Bitcoin down more than 3.5%. Want to point out Bitcoin buyer MicroStrategy, that's down more than 5%. That is a Bloomberg Business Flash. Tom and David.
Lisa, thanks so much. Greatly appreciate that. Rob Carolyn has been wonderful at giving us the scope and scale of the weather driving this horror in Los Angeles. Rob, I want to go to the most important place on the map this morning, which is 520 North Elliver Street, Oxnard, California. That is where the Oxnard, California National Weather Service is. What are they doing in that building early this morning?
Well, they're focusing on when the winds are going to be highest, Tom, and it's looking like it's Tuesday into Wednesday. They have wind advisories out for a good portion of Southern California for today through about 4 in the morning on Tuesday. And then as this upper-level disturbance goes by and starts to tighten up the flow, a high wind warning kicks in tomorrow morning at around 4 a.m. and runs through noon on Wednesday. That's when they're very concerned that the northeasterly flow could produce wind gusts up over 45 to as high as 70 miles an hour. It's going to be breezy out there today with some gusts over 35 miles an hour, but the pressure gradient out there is going to tighten up during the night tonight, and particularly during the day tomorrow and into Wednesday.
Can they predict winds accurately? Can they go canyon to canyon or town to town and say this town's going to get hit hardest?
Well, CAL FIRE's got lots of remote sensors out there, so they can watch what develops in real time. They have a mesoscale network of meteorological stations, so they get a pretty good idea. What they're looking at today is they think Ventura County is going to be affected more because the flow today is going to be more out of the east, so Ventura County is more at risk. Then as the flow becomes northeasterly tomorrow, it starts to shift the attention back into Los Angeles County because of some of the orientation of some of those canyons. They have the tendency to funnel northeasterly winds, and that's why they're concerned about the higher gusts with that higher pressure gradient. The only good news is, and we saw it this weekend, when the winds diminish and the winds turn onshore, the firefighters were able to make some progress. It looks like it turns onshore by Friday, and we get the marine layer to push into the LA basin Friday, Saturday, and Sunday. So that should increase the humidity quite a bit and drop the temperatures. And I think by the upcoming weekend, the weather may actually start to help them quite a bit.
Rob, lastly here, just help us with the rarity of what we're seeing here. Of course, we're well acquainted now with the devastation across this area, but I see this note about a particularly dangerous situation, red flag warning in Santa Barbara, Ventura, and Los Angeles counties, Monday night through Wednesday morning. This is a rare signifier, something we don't see a lot. What does it actually tell us about what we're seeing?
Well, what it tells us, David, is the fact that the winds have been getting so strong. I mean, Santa Ana's occur from the fall into the early part of the winter in Southern California. But in this particular case, we've been seeing them get very strong. Last week we had gusts over 100 miles an hour, which is the strength of a Category 2 hurricane. Tomorrow they may gust to the strength of a Category 1 hurricane. And with the fact that Southern California has had less than 0.2 of an inch of rain since the beginning of October and had above normal precipitation last year, which led to higher vegetative growth in the last 12 months, we just have a bad combination of all the wrong ingredients in place in Southern California over the next several days.
Rob Carolyn, thank you so much, and we'll visit again here in a few hours. Mr. Carolyn is, I say, surveillance meteorologist providing a lack of hysteria for all of Bloomberg Media. Just can't say enough about how he's delivered the goods here in the last week or so. We start strong this morning with the perfect guest. Patrick Armstrong is fearless at Plurimi Wealth in the United Kingdom. He's very visible within the British press, but far more has a wonderful cross-asset view. Patrick, within the equity markets, is this a correction or something more?
Well, we're already in a correction. If you look outside of the United States since October, the MSCI World ex-US is down 10% now. The US is probably down about 6% peak to trough if you include today's futures. So a correction won't surprise me because we're already in it in many places in the world. The US is very close. We've been really negative on 10-year yields for a number of months now. We think Trump getting inaugurated next week, he's unequivocally pro-growth short-term and definitely inflationary. All of his policies, we think, either provoke growth, which is inflationary, and provoke inflation through tariffs and protectionism. So you do have the S&P not at record multiples, but it is near record multiples on many measures, and it's hard to have those multiples sustained as yields do move higher.
If you suggest higher yields, lower bond prices, note prices, bill prices, does that mean some equities do well and others don't, or do you just run and sell?
So, yeah, definitely there's interest-sensitive equities are going to struggle in this environment. We do think the 10-year yield keeps moving higher throughout this year. Companies that have a long duration where the market's basically discounting future cash flows that are very far into the future. So those are the mega cap growth companies that don't have massive earnings today, but the market's hoping for massive earnings. Those get discounted at a higher rate. And the traditional interest rate sectors, or interest rate sensitive sectors, such as property companies, I think are going to continue to struggle. Utilities, dividend payers, those kind of companies as an alternative to bonds, I think face headwinds.
Patrick, what do you, when you see the 10-year yield moving as it is, what is that telling you? What would you suggest to a novice who is watching this with some stupefaction?
Well, it's not moved enough yet. We do think we get above 5% by year end, and the market's too complacent on inflation. If you look at the 10-year inflation swaps, you're at 2.3% today. And that's just pricing the Fed for a perfect decade. And there's so many forces, protectionism, nationalism, running massive deficits, stoking demand. All of those forces are inflationary. So there's going to be periods where inflation looks in line with the Fed targets, but there's going to be intermittent spikes. So you've got a yield curve historically, which is steep. 1.5, whatever the Fed funds rate, 1.5% above that, is typically where the 10-year yield is. So if you've got the Fed cutting once, maybe twice this year, and a normal yield curve, you do get a 10-year rate of about 5%. So it's the market was too complacent on inflation. It's starting to get less complacent, but it's still at a phase where it's too complacent, in my opinion.
To someone who sees that and feels worried, is your counsel this is a return to something close to normal? Don't be as spooked as you might feel like you should be, or is it telling you something that is potentially worrisome?
So there's potential drivers of the 10-year yield. And if it's stagflation, meaning weakening growth but higher prices, that would be a terrible environment for equities. If this normal yield curve is implying that we are getting back to an environment where there's growth, we think the U.S. economy is going to grow at almost 2.5% this year, which is above its long-term potential. Equities can move higher in that environment because you are getting earnings growth, you're getting economic growth, and the normalization of the yield curve is something you shouldn't be worried about. So in our base case, it's based on a no landing scenario in the United States is a big part of it, combined with some inflationary pressures. And we do think equities move higher for the year, but because the yields have moved so quickly and so sharply, you're getting a bit of weakness right now.
We continue with Patrick Armstrong of Plurimi Wealth, Leslie Falconio sitting by, head of U.S. Fixed Income Asset Allocation, UBS. We'll get to her on these higher yields in a moment. We welcome all of you across the nation on your commute, Apple CarPlay, Android Auto, on Sirius XM Channel 121. What's the one thing I got wrong last year? I had no idea how big the Sirius XM audience was. Their handlers came in. It was like 7 guys with briefcases. And they said, here's where we are. Good morning on Sirius XM. And, of course, 92.9 up in Boston, 99.1 FM in Washington. And good morning to our flagship across all of the tri-state area, Bloomberg 1130. Patrick, couple more questions. How do currencies play into this? I mean, I got a dollar fact running away, dollar stronger. Is it like equities, like the shorts throw the towel in? Does the weak dollar crew throw the towel in and we get a convexity and an acceleration in strong dollar?
It's hard to see the dollar weakening right now because you're getting the safe haven benefits of it. You've got a Fed that's going to cut less than the ECB. We think the ECB cuts 4 or 5 times this year, and we think the Fed's only cutting once. Higher economic growth based on real deregulation out of the Trump administration. Fiscal stimulus continues. So all of those factors do lead to dollar strength in 2025, in our opinion. I think a big chunk of the move has happened already, but I do think you see the dollar continue to grind higher, and the rest of the world is going to use their currencies to combat potential tariffs that will be coming in. So I think weak currencies for the rest of the world to combat potential U.S. tariffs is going to be part of the currency wars that emerge this year.
Patrick, thank you. Thrilled to have you start us out on this Monday morning. Mr. Armstrong, CIO, Plurimi Wealth Management in London. Joining us now, Leslie Falconio. We switch over to fixed income here in retreat. Prices lower, yields higher. Leslie, I have really issue with yield, and spreads. Pros like you are like yield this, yield this. Prices are down. How bad is it? Is there a correction across the yield curve?
Well, look, I mean, I understand what you're saying, but listen, the purpose of fixed income is compounding income, right? And what you're seeing now in terms of some of these yields that you're offered, you have a lot of cushion, right, before you break even. But one thing that I will say, I mean, momentum now is obviously for the 10-year to likely reach that 5%. And we think it has the potential to reach that too. We just don't think that it's going to be sustainable over 5%. And, financial conditions, while tightening, that core of financial conditions comes from the credit market. And right now, even though we've seen that 100 basis points rise since that September 50 basis point cuts, credit has done incredibly well, right? It's really stayed. The volatility has been very low. Spread vol has been very low in credit, and it's really held in quite well. Now, if you go above that 5%, 5.10, and it stayed there, meaning it's sustainable, not just see it, then we think there's going to be an issue in terms of that credit side and things like, high yield. And this is where we start to get a bit concerned. I mean, obviously, it's whether or not it's due to inflation or growth. But right now, I mean, credit is held in quite well. So we think this is really more of a momentum issue in terms of the Treasury side. And we You can definitely see 5%, but we just think it's a question of sustainability.
Leslie, Tom hates it when I look backward, but let me take Friday's jobs numbers and have you push forward if you could go back to the numbers that we got then. How did that change your forecast, your sense of where things are headed, seeing that blowout report of last week?
Look, there's no question. 256 was large, and not only that, but Bloomberg was talking this morning, which is absolutely true. I mean, the composition is much different, right? It's private now versus, say, government education. But I do think that this could be, in January does have a tendency to be vulnerable to revisions. And there's no question that jobs number was strong. We're seeing, Atlanta Fed now around 2.6, and we're not arguing that the economy is going to crater by any stretch. I mean, we think that growth stays, above trend. But I think that this one number, particularly what we're seeing, what's happening now on the West Coast, there could be some implications going forward. And we do think it's subject to revision. So again, we think interest rates could go up to that 5, maybe a little bit over 5% level. We just don't think they're going to stay there, particularly given how hawkish the market has turned. I mean, now they're pricing in 19 basis points for all of 2025 and a terminal rate of around 420. And everyone sort of is moving on the spectrum. Right. Everyone's on the same side now, right? No one's bullish. Everyone's bearish.
Well, and we saw this weekend with some of the exuberance numbers really pulling back and, different fancy measurements I frankly don't understand. Leslie, what at UBS do you see people doing? Are they going wicked short duration cash or the Paul Sweeney 2-year? What are people actually doing this Monday?
We've recommended staying in terms of where to stay on your duration sort of component or interest rate risk. Most of that short end. So we're staying a little bit 5 years and 5 years below. We haven't liked the back end for quite some time. This goes back to the summer, simply because our view was that the curve was going to normalize. It's going to steepen. And whether you're bullish or bearish, the long end was going to underperform. Obviously, since the sweep, it's been, sort of compounded. We've seen a really large rise in that back end. We still don't like the back end yet. We're going to wait a little bit till we get to around that 5%. But to start to lock in at that area, given how hawkish that market is, right. And that what they're pricing it is not necessarily, a bad time. But right now, it's just you can't look at it every day. It's particularly as the Fed is so data dependent. We know we've got some inflation numbers coming out this week, but we're starting to see, people definitely have this interest in terms of moving out the curve versus staying with that short end that we've recommended.
Brilliant, Leslie. Thanks for the morning brief, Leslie Falconio, with us, head of U.S. fixed income at UBS. Can't say, that's what I love, David. This is wait, you invented the show with me. Excuse me. Well, but the idea of going equity and fixed income back to back. That's the way we roll. With our news in New York City is John Tucker.
All right, guys, in the Los Angeles wildfires, the death toll is now up to 24, and more than 12,000 buildings have been turned to ash in the Pacific Palisades and Altadena regions. Over the weekend, firefighters did get a brief break from the punishing Santa Ana winds that have spread the flames across about 38,000 acres. But another round of wind gusts is in the forecast this week. Here's Los Angeles County Fire Chief Robert Luna.
The fires may be closer to being over. You hear that from our fire chiefs if it goes that way. But we do have this pending weather event. We are not going to de-escalate the number of people that we have out.
LA Fire Chief Robert Luna. The National Weather Service has issued its most severe alert, particularly dangerous situation warning for Malibu, the Fernando Valley, and the San Fernando Valley, and much of Ventura County. More than 7.7 million people facing critical fire weather conditions today. Justin Trudeau says Canada ready to respond with counter tariffs if the U.S. imposes tariffs on Canadian products. The outgoing prime minister there said his government isn't looking for a trade fight, but will have to retaliate if the U.S. puts tariffs on Canadian products.
We are the #1 export partner of about 35 different U.S. states, and anything that thickens the border between us ends up costing American citizens and American jobs. That's not what President Trump got elected to do. I know he got elected to try and make life easier for all Americans, to support American workers. These are things that are going to hurt them.
Justin Trudeau making the comments on MSNBC. President-elect Trump's cabinet choices are going to start facing Senate confirmation hearings this week. On Thursday, the Treasury Secretary nominee, Scott Bessent, will answer questions. And you're going to have to wait a little longer for the next space launch. Jeff Bezos' Blue Origin delaying the inaugural launch of its new flagship rocket to deal with an unspecified issue on the vehicle. One of the advantages of getting up in the middle of the night to come here is that you can look up in the sky and see all sorts of things. And I'm not talking drones. The first full moon of the year moving across the sky tonight.
Gorgeous.
Some parts of the world, it's also going to pass in front of the more red than usual Mars. It's lunar occultation.
Absolutely nailing this. It's spectacular.
Driving in, a telescope on his left eye and his right eye on the road.
Great.
John
He's got the
Not quite.
15-inch Maxutov up there.
Wow.
Lawrence McDonald, convert bond, my essay of the year a couple years ago, with the smartest tweet I've seen. It's got some opinion in it, David. California needs, this is his opinion, needs 2 times Ukraine-sized package.
Incredible.
Very soon. 25% of U.S. debt rolls over this year. Larry McDonald, California's 11% of U.S. GDP, 12% of non-farm payrolls. The scope and scale, unimaginable.
Just beginning to grasp.
No other way to put it. Stay with us on YouTube. Subscribe to Bloomberg Podcasts when you're through your commute.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have futures set to add to Friday's losses. This is after jobs data kind of put the brakes on rate cut bets. There's more economic data out this week. Today, it's the New York Fed's one-year inflation expectations. But tomorrow, producer price index, and that's followed by December's consumer price index on Wednesday. Can't forget bank earnings also kick off this week. JP Morgan Chase, Citigroup, Wells Fargo, BlackRock report Wednesday. Thursday, we have Morgan Stanley, Bank of America. All right, let's get to NASDAQ futures because they're down more than 1%, 223 points. Dow futures down 0.2%, 96 points. And S&P futures down 0.7%, or 42 points. Treasury yields extending last week's advance. We have the 2-year yield at 4.40%, up 2 basis points. And the yield on the 10-year, 4.78%. That's up 1 basis point. The Bloomberg Dollar Spot Index up 0.2%. We have shares of Macy's falling, down about 2.5%. Trimmed its sales outlook in the current quarter after the holidays just didn't deliver. And then you have Moderna. It's off more than 18%. Cut its 2025 sales forecast. Slow demand for its COVID and also its RSV shots. And finally, sources saying Johnson & Johnson in talks to acquire Intracellular Therapies, a biopharmaceutical company focused on central nervous system disorders. It is official. Shares of Intracellular, they're up more than 35%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. Thank you for mentioning earnings. I'd completely forgotten. Oh, yeah, the banks report this week. The news flow, folks, is absolutely incredible. We're going to try to balance it for you and keep you up to date. Thank you, Rob Carolyn, for the fire update here 20 minutes ago. Jordan Rochester just publishing with Missoula. Everybody's publishing this morning. And, you know, he folds in David Gura on weak euro natural gas. Like the worry about natural gas 12 months ago is the worry now. We got through it a year ago, but he's looking for some real challenges in Europe and the United Kingdom.
Challenges in Europe, more challenges in Europe and the United Kingdom.
Yeah.
I should say. Yeah.
Weaker euro. We'll have to see. Joining us now, Michael McKee, chief Broncos correspondent for Bloomberg.
I watched that game yesterday. Did you watch all of it, Mike?
I did.
Okay.
Did you?
He was optimistic till the end.
They look good coming out of the game.
If you're a Broncos fan, you go into all these games expecting to lose. Yeah. They're better. Bo Nix has got a lot of talent. He's a good quarterback, but they're not good enough yet, and that's okay.
What does the Fed do with a cacophony of news? Jerome Powell's going to say to you when you ask that rude question in the press conference,
two of them.
We're maintaining focus on our, blah, blah, blah. Baloney. There's a huge cacophony of news. How do they process it?
One data point at a time, basically. They're at this point not going to move in January. They've told us as much, and the premium would be on not moving, given what's going on with the markets at this point and the forecast for what the president-elect may or may not do. The question then becomes, a week from today,
right?
He promises 100 executive orders, and you're going to have a whole bunch of Fed economists parsing through them to see what is economic and what they might mean.
I thought Greg Ip in the Journal this weekend was absolutely brilliant, talking about mirroring economics. The new chief economic advisor for President Trump is a bit of a different Harvard PhD. And Ip goes paragraph through paragraph, and Doug Irwin and Dartmouth's in that article saying, no, he's wrong. I mean, it's just that simple. Tell us about, Mike McKee, the magnitude of tariffs from 2% now, as Krugman said last week, out to a proposed 20%.
Well, it's going to be different from what we're talking about in terms of Trump 1, because this is the universal global tariffs, which would put a price increase on everything, basically. But then the question is, how is it applied? Does he declare an emergency and do it all at once, or does he go through the process he went of finding reasons under the trade laws? If he does that, then you spread it out, and you could have more of an inflation problem by doing that, because you will have continual price moves. But if he does it just once, you'll have a big price move and it won't continue. However, I think the best line of the weekend was from Scott Lincecum at the Cato Institute, who said he doesn't think that Trump will impose massive tariffs on day one, because who wants to raise the price of guacamole right before the Super Bowl?
When the Broncos are in the Super Bowl. Mike McKee, you're going to come back here, I believe, in 25 minutes. Thank you for that. Kit Jukes was so fired up. He wants to come in and comment on the Denver
Broncos. Right.
Joining us now from Society Generale in London, Kit Jukes, and we won't ask what Arsenal did this weekend. Kit, Mike McKee brings up a point, which is there seems to be a tinge of inflation out there. Have we lost the expected disinflation vector?
Yeah, I mean, I sometimes think we get too excited about, inflation sort of getting down closer to 2 rather than getting a bit stuck somewhere near 3. We set up this inflation targeting game for central banks, back in the 70s when we had inflation that was in double digits. And, these are sort of rounding errors on individual bits. Inflation at this point is going to be quite sticky because the labor market in the US is quite tight. There's shortages of workers in various places. There's bits and bobs of frictions of costs coming through. And it's not just going to slide to 1% in a straight line really fast. And that niggles a bit. I'm not sure that the economics of it is telling you anything more than the US economy is not slowing down at this point in time, and it's not going to drive inflation down fast. I think that's probably the simple way to put it.
You mentioned that inflation targeting game, and I wonder if we're going to see it end here with a whimper and not a bang in the next few months. And of course, we've heard from the Fed chair over and over again how committed the Fed is to that 2% target. Given all of the uncertainty that we've been talking about, that Mike McKee was mentioning just a moment ago, and what's happening inside the Eccles building as all these hundreds of researchers try to process what might be happening here tariffs-wise, do you think we're going to see an end or less leaning on that 2% target going forward?
Yes, I do. I mean, I think you'll see that over time. I think I don't think that'll prevent the fact that the Fed will be nervous or will feel there's no massive hurry. The economy's close enough to full employment at this point in time to kind of be sort of looking at it, not saying things like, well, the next move's a hike or stuff, but say, look, let's kind of slow down, take a bit of time out, look at it. But I do think that you want to manage the idea that you have a firm target to send to people at the same time as recognizing that this is kind of a fluffy concept. What do we actually think the inflation rate is? We have various ways of measuring it. That A, it's going to get stuck for a little while. B, getting all the way down to 2% might take quite a long time.
Right.
And C, how precise are we really being about this? And we shouldn't be too stuck about that.
Kit, the heritage of Société Générale is a heritage of French mathematics. You grew up in France. You know that. You lived it. And the idea here is a measurement of the risk out there. What are the losses taken by the market if they've been saying short dollar, weak dollar, and the dollar just keeps migrating higher? Is it like the equity market where there's tangible money to lose?
Well, there are people who are going to lose money hedging in foreign exchange in the real world. So people will lose money because anybody who's booked a holiday in the United States to, go and ski in Vail or somewhere this winter is going to get hit if they haven't bought their dollars yet. So there's real stuff like that. There's real stuff for people doing trade. There's real stuff for Americans who haven't taken advantage of people importing who haven't paid for it at the right time or paid early, so on. So there are costs, and there are quite big costs. The foreign exchange market is a big market. You'd have to say the difference with the equity market is that when we have a huge foreign exchange move, it's a fraction of what the equity market can do on the course of a month or two. So we don't have such big moves.
Okay.
But even so, this causes real pain to real people. And
Right.
people have to sit about, what am I going to hedge today?
On short notice, Kit Jukes with us with SocGen. Thank you so much. This was DXY over a 110. BBDXY, the Bloomberg Dollar Index, out to a new territory, 1322 for global Wall Street. The euro, wow. I mean, there's no other way to put it. A 101.91. We're not on the parity watch, but boy, are we there in 2 or 3 days. Yen not giving me love. I'd expect a 158, 159 yen. I don't have that. Yen actually pretty resilient at a 157 handle, but all sorts of EM. Damien, I was watching Damien lose money yesterday, David Gura. And, I said, can you bet in Singapore dollars?
Yeah.
Because it just weakens as well. Mexico, not out to 21, but 20.76. Canadian dollar, the loonie, a 144 handle. Even Turkish lira gives way here to a weaker currency. The dollar ascended this morning. Now, part of the deal, like somebody in your entourage, I don't think it was your agent, it was maybe your manager, said when Zach Cohen's on, Gura's got to drive the interview. Are you prepared for Zach Cohen?
I'm getting ready. It's a busy week in Washington. There's like maybe 12 confirmation hearings just tomorrow.
We got a box up above the smoke, above the cigar smoke, where we'll be looking at a lot of confirmation hearings. David Gura in conversation with Zach Cohen. We'll do that in a minute. We're out on YouTube. You need to subscribe to Bloomberg Podcast on YouTube. It's our new distribution. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, the sell-off continues as traders kind of reassess the Fed's rate path. Bank of America changed its bets from a projection of 2 quarter-point cuts this year to saying it no longer expects any. It also added that there's even a risk the next move is a hike, and Goldman Sachs sees 2 cuts this year, down from 3 earlier. We'll start with NASDAQ futures down 0.9%, 200 points. Dow futures down 0.1%, 55 points, and S&P futures down 0.6% or 37 points. We have the 2-year yield at 4.40%, up 2 basis points. The yield on the 10-year, 4.77%, and that is little change. To commodities, oil hit a 4-month high. We'll go to Brent crude, up nearly 2% at $81 a barrel. WTI crude, $78 a barrel. The Bloomberg Dollar Spot Index up about 0.1%. Companies in the news, we'll start with Tesla. It beat Volkswagen's Audi in a global car sales for the first time. Audi actually sold 1.6 million vehicles in 2024. Tesla delivered nearly 1.8 million last year. And BMW car sales dropped due to a costly recall, also weak demand in China, falling 4% to 2.45 million vehicles in 2024. But here's the thing, its EV sales rose 14% last year. And finally, Apple sold 5% fewer iPhones and lost ground to Chinese rivals in the holiday quarter. That's according to Counterpoint. Its shares down more than 1%. That is your Bloomberg Business Flash. David and Tom.
Thanks so much, Lisa Mateo. We welcome all of you across the nation, and particularly in New Mexico this morning. At 35 minutes past midnight on June 19th, 1959, the time of Dwight David Eisenhower. He had a Senate confirmation hearing, and it went down in flames. Lewis Strauss, an admiral, was denied a cabinet position under Ike. That's how rare this is. Joining us now to speak with David Gura, Zach Cohen. Gentlemen, go.
Tom, I do hope you'll participate in some capacity. Zach, great to have you with us. Zach, of course,
I'll get the
tax reporter at Bloomberg Government. Set the stage for us. This is going to be a busy week, and of course, we haven't even gotten to Inauguration Day, but we have each of these many cabinet nominees sitting before their respective committees on Capitol Hill. I imagine the one that you're going to be watching most closely is that before the Senate Armed Services Committee, Pete Hegseth there. And that, picking up on what Tom said a moment ago, if any of these seems in doubt, it might be that one.
I mean, we all remember there's been a number of cabinet nominees that have failed over the years. I'm remembering John Tower, the former Secretary of Defense nominee, that failed in kind of spectacular fashion a couple of decades ago. You mentioned Lewis Strauss. And we don't have to look much more lately than that than Matt Gaetz for the Attorney General slot that failed before he was even formally nominated for the position, and now is a former member of Congress from Florida. And so it's hard to underestimate just how much these confirmation hearings and the lead up to them can make or break a presidential nominee. Senate Republicans are very eager to get some of these folks through the confirmation process. They can be confirmed on day one on January 20th or the afternoon after President-elect Donald Trump is sworn in on the steps of the Capitol. But certainly these hearings set the stage and allow Senate Democrats especially the opportunity to try to pick holes in their records, especially for people like Pete Hegseth, who faces a number of allegations around things like mismanagement of a Veterans Affairs organization, sexual misconduct, all things he has denied, but have certainly been a target of conversation.
Zach, the Senate Democrats will be picking holes, but I wonder what we know of their strategy going forward here. If some of these nominations are assured, how much of a stink should they make? How do they view the kind of utility of these confirmation hearings as they look at the minority that they're in here in the next Congress?
Yeah, over the last couple of decades, senators have basically agreed that simple majority is the only way that these nominees are going to get through. Very rarely do you see, especially cabinet nominees for the Supreme Court, get through with large bipartisan support of the 60-plus votes that we used to see before the filibuster was eroded time after time in the Senate. And so Democrats really have more of a rhetorical job this week with their audience being really just a handful of Republican senators, people like Senator Susan Collins, Lisa Murkowski from Maine and Alaska, respectively. Some of these more moderate senators that might be convinced to vote against a nominee or, simply before it even gets to a floor vote, tell the Trump team, hey, maybe we got to withdraw this particular nomination. We've seen that with other nominees, including a former Secretary of Defense nominee during the first Trump administration, Pat Shanahan. And so certainly there's some precedent here for building enough of a case against the nominee that they fail before they reach the floor.
So if Cohen of Maine votes against candidate A, cabinet member A, what's the outcome for her? How is she harmed?
Yeah, Susan Collins, arguably one of the more vulnerable Republicans.
I'm
no, it's okay. It used to be a Cohen from
that's
Maine.
what happens.
Cohen, right?
I got two pros. I got Gura and Cohen, legitimate political pros.
Running,
and I'm like, mixing up Bill Cohen, the wonderful William Cohen.
Yeah.
I'm such an amateur. Zach, save me, please.
No, I mean, it's a great question because Collins really is one of these key figures during this current Republican Senate. They do control 53, 54 seats once Jim Justice from West Virginia is sworn in. And so Collins has some leeway here to vote against the nominee on the floor that she might oppose and win some plaudits with voters in Maine who will decide just next year whether to send her back to the Senate for another 6-year term. I believe the only Republican senator up for re-election in a state that Vice President Kamala Harris won in November. And so certainly she's got to walk this tightrope between appealing to members of her own party, certainly, but also voting and finding ways to appeal to Democratic voters. I will point out during the Biden administration, especially because the Senate floor has been so dominated by nominee votes, Collins has a penchant of actually voting more with Democrats than with Republicans when it comes to getting some of these nominees through. So she's certainly one to watch.
Zach, let's preview the hearing on Thursday with Scott Bessent. In advance of these hearings, a nominee submits a lot of paperwork, answers some questions. I think with Scott Bessent and a lot of other nominees, there's still uncertainty about how they might approach policy, how much of it will just be kind of divined by President-elect Trump and what he wants to do to the extent that we know in great detail or any detail what those policies are going to be. What have you learned just in this kind of period of preparation for that hearing on Thursday about, yes, what he's likely to testify to, but also how he might lead the Treasury Department should he be confirmed?
Well, certainly, Scott Bessent's major focus, should he be confirmed as Treasury Secretary, is going to be a very quick negotiation to try to renew the 2017 Tax Cuts and Jobs Act. That Trump-era tax cuts, those expire at the end of this current calendar year. And it's not lost on us that they've appointed an Assistant Secretary for Tax Policy, Ken Keyes, who is steeped in this issue. He used to work on Capitol Hill years and years ago as a longtime lobbyist on tax issues. And so they're bulking up with their expertise on tax policy in advance of these negotiations with fellow Republicans that could be really quite contentious as they try to get to some sort of agreement on a multi-trillion-dollar package. Bessent's also going to face certainly plenty of questions from Democrats. Senator Elizabeth Warren, the Democrat from Massachusetts, the top Democrat on the banking committee, will have her opportunity to question Bessent, and just today said that submitted 180 questions to Scott Bessent on things like taxes and tariffs, banking policy, Fannie and Freddie. These are the kinds of questions that he's going to get before this panel. And so he's certainly got his homework set up for him over the next couple of days to prepare for this.
Zach Cohen, thank you so much. Bloomberg Government in Washington. Right to it with our news in New York City is John Tucker.
Yeah, at least 2 rounds of vicious Santa Ana winds expected to blast through Southern California early this week, bringing powerful gusts that are going to challenge fire crews struggling to contain 2 destructive blazes and likely force thousands more to evacuate. This disaster is on track to be the costliest in U.S. history. AccuWeather raising its estimate for total economic losses up to $275 billion. FEMA Administrator Dean Criswell says things need to change when it comes to rebuilding.
We have a lot of science and technology out there that shows ways that we can make these homes stronger and more resistant against these fires. That's really where we need to focus our efforts as we move into the rebuilding phase. FEMA's Deanne Criswell appearing on CBS's Face the Nation. The death toll, at least 24. Hospitals across the country dealing with a wave of respiratory illnesses. The CDC says at least 35 states seeing high levels of flu, COVID, RSV, even the common cold. So far this season, the flu alone has sent more than 63,000 people to the hospital and caused 2,700 deaths. And tax filing season in the U.S. starts January 27th. It ends April 15th. The IRS promising to sustain its momentum of improved service and digital offerings from last year. About 30 million taxpayers also will have another option to file for free with the IRS
with the agency's new electronic filing tool, Direct File, open to an expanded group of taxpayers. Global news 24 hours a day, and whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg.
John Tucker, thanks so much. Futures negative 49, negative 35. Away to the tape, but the VIX comes in from the trauma of an hour ago, 21.21. The VIX out well over 20, I think gets your attention here. Gura riveted on cable, 121.24. Cable's British pound. Dave.
Yes, I know.
The cable goes under the water.
Jukes taught me that some time ago.
The cable goes under. I don't know which is the numerator and which is the denominator. Bloomberg Surveillance, good morning.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. And of course, what we do here in the daily look at the front pages, the Lisa Mateo moment, brought to you by IBKR Financial Advisors. Switch to Interactive Brokers, the lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. ibkr.com/RIA. Lisa, a busy weekend.
It is, and a busy news flow, too. We're still talking about the Los Angeles fires. This just coming in from the Daily Mail that the mega mansion that was featured in the hit show Succession, that is gone. It's been reduced to rubble. It's the most expensive home in the Pacific Palisades. If you remember, if you're a fan of the show, it appeared in season 4 Succession, 2023. It was the home of the Roy siblings. You saw the patios, views, like those extensive views of the area. That was a backdrop for a lot of areas. It was gorgeous.
Fire pit?
Yeah, fire pit. Exactly, exactly. So everything out there, but they're saying that it has collapsed. It was a 4-story building. It was owned by Luminar Technologies chief Austin Russell. He actually bought it in 2021 for $83 million. It was valued around $125 million before the fires, and he actually wasn't even living there. It was being rented out when the fires, before the fire started, for about $450,000 a month. But that now is gone. It's been reduced to rubble.
Tom, we were talking about this before the show, just the way in which people, yes, in Los Angeles, but outside of Los Angeles, trying to piece together if these properties still exist, doing a lot of kind of forensic work, just trying to figure that out.
Yeah, we're all touched by it. And, I thought that the security overlay I heard yesterday is great, but the real story is the fires aren't over. That's, on this Monday, the story is Rob Carolyn's on Total Watch through at least Wednesday, if not into Thursday of next week.
Yeah, and also Lucas Shadow, he has great insight in his Screen Time newsletter about the effect of Hollywood on the fires too.
It's really
so also
poignant,
keep in mind
actually.
for that.
Yeah.
Yes. All right, we'll take you from California. We're moving over to Colorado. It's a different kind of look if you've been to Aspen lately. Used to have like the North Face puffers and jeans. Well, Aspen is going a little more country chic. Cowboy hats, but like with diamonds in them.
So you think some
Gucci,
reporting
Prada.
is necessary here?
I think we need a road trip.
We got to get out there.
Lisa on the Gulf Stream will work out great.
I really think we do. We have to go to Gucci, Prada, because they're all like starting to go in the area now. This is the Wall Street Journal. They're saying like Max Mara opened this store where you can get a $4,000, fuzzy teddy coat.
Max who?
Max Mara. So Gary.
Hold on, Mrs.
Gotta
Keene is
check it
calling
out.
me.
Gotta check it out.
You have no idea.
But it's changing. You know, the snow bunnies are wearing like Prada puffers. And
What if they
like
fall
that.
down? Okay, they got a Prada puffer on.
Yeah.
If you fall down, do you fall down with any more grace?
I guess not, but you look good doing it.
You look
see?
good.
That's
You
the
look
thing.
good
There you
breaking
go.
your ankle.
You spent some time in the Centennial State, Tom. Did you go to Aspen when you were there? I mean, when you were...
I went through it. Yeah, the one I
Drove up.
really did was Steamboat, which is
Okay.
much farther
Closer,
over
yeah.
to the west. But that was ancient history, and you know they're having a rough time of it between Ski Patrol on strike at Park
That's
City,
right.
and
That's right.
just the sheer. To me, there's too
And the
many
demand
people
for
on the
champagne,
slope.
I guess, in Aspen.
Yeah, it's I guess.
But a lot
you'd
of
rather
celebrities
be
going.
in
Yes.
Colorado.
Yes.
Next.
A lot of celebrities going there. Mariah Carey, Jennifer Lopez, Jeff Bezos.
Tom Keene.
Okay, Tom Keene. Here we go. Baby boomers and users of weight loss drugs giving this boost to injectable aesthetic treatments. This was in the Financial Times. It's because, quick explanation, people losing weight, right? Your face begins to sag, and they call it Ozempic face. So now they're needing these injectables to help give a little plump. Give it that,
Neuromodulators, Tom.
Give it that little plump that you need. And they say baby boomers are starting over 60 plus. And it's not just women, it's men too, just to let you know. But they're seeing this significant uptick in the use of it. So these are injectables. They make you reduce wrinkles, but also give your skin that little plumpness to kind of help it out after you lose weight.
Now you know.
I'm telling you.
Now you
Gotta
know,
go
Tom.
check it out, Tom.
What, Ozempic? I don't think so. Lisa Mateo, thank you so much. Off to Prada and Gucci and Aspen. You go. We lost a giant this week.
Yes.
Sam Moore of Sam and Dave. It's about Stacks. It's about Memphis. And we say good morning to all of the South.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. David Gura in for Paul Sweeney. I'm Tom Keene. Michael Barr on assignment this morning. John Tucker holding court as the Washington Commanders.
Yes.
Playoff bound after 19 years.
19 years.
19 years.
Nearly 2 decades.
There we go. It's exciting. You know, it's all there is to it. Lisa Mateo with us as well. We welcome all of you on your commute across the nation. The news flow. Greg Villiers out with a smart note this morning. And he said, you know, we're all focused on the fires, David Gura, but the news flow away from that. Extraordinary.
Between the markets and what's happening in Washington, a tremendous week ahead. It's Monday.
The
a busy
hearing
week ahead.
with you and the Zach Cohen show in the last hour.
Yes.
Help us out. Is it 9 a.m. tomorrow?
10 a.m. A little later. The senators
10
need a little
a.m.?
more time to get to the hearing rooms. But yeah, tomorrow they begin in earnest.
How long is a typical hearing?
Most are just a day, but for Attorney General, I think they're planning for 2 days. Pam Bondi will be before the Judiciary Committee for 2 days. So we'll be able to kind of handicap how this went pretty soon after.
We'll have to see on that. What you need to know is markets on the move here. Lisa's going to do that here in a moment. We haven't mentioned oil, 78 on American oil. Brent crude, $81 a barrel. Javier Blas will be joining us here in 7 minutes. Originally, it was to get Mr. Blas through his people on coffee, on olive oil.
But
I'm sorry, his oil market is moving. Javier Blas with us, Dennis Gartman here in a moment. Yes, we'll touch on gold. Just an interesting day in the markets. You got dollar out at a 110 on DXY and euro. I am on the parity watch with a 101 print. Right now, 102.00. Bloomberg surveillance this morning. Brought to you by Cohn Resnick Advisory Assurance Tax for 4 years straight. 3, 2, 1. For 4 years straight. Hedgeweek is named CohnReznick Audit Firm of the Year. Let CohnReznick's financial services team show you why. We thank you, CohnReznick, for heritage support. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yeah, and we've got futures lower. Analysts kind of rethinking their Fed rate cut predictions after Friday's blockbuster jobs report. Tech shares really getting beat up this morning. Among the high-profile losers, we have Tesla down 3%, Palantir Technologies down more than 3%, and we have NVIDIA down nearly 3% as well. Want to get to NASDAQ futures. Down 0.9%, 205 points. We have Dow futures down 0.1%, 61 points. S&P futures down 0.6%, or 38 points. The two-year yield, 4.39%. That's little changed, and the yield on the 10-year, 4.76%, and that is little changed. Oil climbing to a 4-month high. U.S. sanctions on Russia's energy industry raise supply concerns. So right now we have Brent crude $80 a barrel, up nearly 1.5%. WTI crude $77 a barrel. Want to point out UK-listed shares of BP, Shell, up 1%. Then we move on to currencies. The Bloomberg Dollar Spot Index reached the highest in more than 2 years. Right now it's up about 0.1%. The euro fell to its lowest against the dollar since late 2022, right now at 102 even against the dollar. The British pound down 0.6%. I have to point out Bitcoin, it's down nearly 4%, just over 90,000. Even Bitcoin buyer MicroStrategy down more than 5%. That is your Bloomberg Business Flash. David and Tom.
Thanks so much. We greet the new year with Dennis Gartman, chairman of the University of Akron Endowment, legendary on Wall Street. David Gura. It was amazing how the percentage of people that admitted they read Gartman in the morning and the percentage of people that read Gartman every morning but would never admit it. Uh-huh. Dennis Gartman, why was that, Dennis Gartman? What was so incendiary about your daily morning note? Why did so many people say, I don't read Gartman, but they read it cover to cover?
I think a lot of people laughed at Gartman for a lot of times too. We should take into consideration the laughter factor. Why people didn't want to say that they read my letter is really quite beyond me, but it's been a while since I actually was writing the daily commentary. I retired, 3 years ago with Parkinson's disease, so it's been some while, but I put out something every 2 weeks for friends and family and old acquaintances just to keep involved in the markets. And I'm actually the emeritus chairman of the University of Akron. They moved me up to emeritus status after being on the committee for 10 or 12 years.
Is that because you got gold right?
Actually, we did very well for the university. I fought with the members of the board for quite some period of time, got us to buy gold almost 4 years ago, bought a little bit more 6 months ago, and continue to hold 5% of our portfolio, which for a university is really quite extraordinary.
The inflation,
it's been very beneficial.
The inflation, and maybe moving away from a certitude of a disinflation vector. Dennis Gartman, the inflation is tangible, which tells me gold higher. Is that relationship still in order?
I think that relationship is still in order. Commodities generally are moving from the lower left to the upper right now. Grain prices have stopped going down and are starting to go up. Livestock prices have been up for a while. Obviously, crude oil prices have been skyrocketing in the course of the past month and a half or so. So commodity prices are moving from the lower left to the upper right, and I continue to think that that's going to happen going forward for quite some period of time. Pay attention to what's going on in the term structures. You got inversions in a lot of the markets and contangos that are disappearing relatively quickly, which tells me that demand for commodities generally is stronger than people had anticipated.
The best band to do a contango dance is Milk Carton Kids. It's unbelievable, David, to do the contango with Milk Carton. They're so gentle about it. Continue.
Dennis, it's great to speak with you after far too long, and I want to ask you sort of what your sense is of the U.S. economy now when it comes to inflation. We're looking ahead to CPI and PPI this week. What's your sense of sort of where things stand now, the direction of this U.S. economy?
The economy itself is obviously a good deal stronger than I had anticipated and than a lot of people had anticipated, and Friday's employment numbers were quite a surprise to almost everybody, including me, which is the reason why stock prices were down so sharply on Friday. I continue to think that the Fed will err upon the side of allowing the overnight Fed funds rate to make its way quietly but marginally lower. Yeah. The back end of the curve is under pressure. Rates at the back end of the curve are going higher. So we're going to have a yield curve that is more and more positively sloped. And when you go from an inversion, which we had for a long period of time, to a renewed positive slope, that is always indicative of an impending recession. So the economy is strong right now, but I think it's going to weaken up rather dramatically over the course of the past the future 5 to 6 to 7 or 8 months.
This Monday across the nation on this morning commute, Dennis Gartman with his Javier Blas joining us here in a moment on the higher oil prices. We'll touch on coffee and olive oil as well. We welcome all of you on your commute. Don't forget our new distribution. Subscribe to Bloomberg Podcasts out on YouTube. David?
Dennis, you mentioned you gave up the daily newsletter just a couple of years back. Were you writing it this morning? Were the alarm clocks still going off at 4, whatever it is, in the morning? What would have been the headline today?
I would have talked about what's going on in California without a question. That's going to be detrimental to the economy. And I think it's surprising how much money is going to be spent to rebuild California. It's going to take a long period of time. The estimates are, what, 150 billion. I think it's going to go to 200 billion or more over time. So I'd be writing about what's going on there. And I'd spend some time writing about what's going on in the US dollar. Clearly, the dollar continues to get stronger by the day, by the minute, by the hour, and it's going to continue to do so, which the incoming president is going to be antagonistic towards that. He would rather see a weaker dollar rather than a strong dollar, but I think he's going to face a stronger dollar for a long period of time going forward.
The problem with Gartman is there's like 8 ways to go with this conversation. We've got in at Bloomberg this morning a new estimate of 250 plus billion on the California disaster. David, why don't you pick it up with Gartman on strong dollar in President Trump? I mean, you've reported this.
Dennis, I wonder what you are thinking as you look at the economic team that this president-elect has put together. We were talking about Scott Bessent, who's going to be testifying before the Finance Committee this week for Treasury, but you still have a number of more hawkish figures in that group. Is there a sense that there's going to be unanimity among those economic advisors, and what does that tell you about the strength of the dollar going forward here? You mentioned just a moment ago that this is a president who perhaps favors a weaker one.
Publicly, there will always be they will always agree with one another in public circumstances, but behind the desk, when the curtains are closed, that's the question that arise. What do they believe individually? I'm a little concerned about Mr. Bessent because he's such a strong proponent of Bitcoin and the crypto market. I'm a little disconcerted about the president himself being such a supporter of the crypto market. I have missed the crypto market completely. I will admit that openly and without equivocation. But I think that crypto, if you watch what's going on there, I think that's going to be a price that falls rather precipitously over the course of the next several months. Pay attention to the gold crypto relationship. 2 weeks ago, it took 41 ounces of gold to buy 1 Bitcoin. Now it's down to 33 and heading lower, and I think it goes to 25 over the course of the next several months.
And Dennis, before we let you go, the oddity of the moment, which you and I are the only two breathing that remember Nifty 50. We've got Nifty 7 now. They continue to generate free cash flow. If we're defensive, if we believe in higher yields, is Mag 7 correlated to yield? Or is Mag 7 almost a utility like Dominion years ago where you hide out, say, in Apple?
I don't think you hide out in the Mag 7 at all. I think on balance, if I had to take a position in the Mag 7, I'd be short of them, not long of them. And I think that they will tend to follow what goes on in the interest rate market. Rates going higher at the long end of the curve is going to be deleterious to the Mag 7. The fact I've been bearish of stocks for a while, and I'm in my own account, I'm marginally net short, like short 3% or 5% of my portfolio is net short. And if I had to choose individual stocks to be short, I'd be short of the Mag 7. The fact that we've had such a narrow, defined bull market with just 7 stocks leading the entire market higher, I think that's, to me, indicative of a market that's toppish and heading rather markedly lower over the course of the next several months.
Dennis Gartman, thank you so much. Of course, the Gartman Letter, iconic. He's Chairman Emeritus, University of Akron Endowment. David Gura and Tom Keene, we welcome you this morning. Hope all is well with you. Again, we're out on YouTube. Subscribe to Bloomberg Podcasts out on YouTube right now. I look, David, at what Dennis said here and the folding in of what President-elect Trump will do. And I think for all of our listeners, whatever their persuasion, it's what, 4 or is it 400 executive orders the first day?
Yeah, it's something that the president-elect says over and over again, which is on day one, I'm going to do this or that. And so we'll see what happens here after that ceremony ends and he returns to the White House, sits down at the desk, and I've heard 100. We heard that from Zach Cohen as well. So it's an ambitious slate.
Are you serious? 100? I was making a joke.
No.
100?
So he says. So I think we'll see a flurry of them. Pick your adjective, but I think we're going to see a lot of executive orders.
I don't have the book in front of me, and I'm sorry I can't cite it. It's the Oxford Press History of America. FDR was inaugurated, and they went back to the White House, and he and Hubert Heaver put their desks together. And they literally, folks, in 1932-ish, I'm guessing, heart of the First Depression, they sat across the desk from each other trying to get the machinery going as FDR tried to save the banking system.
It's interesting. I was in Washington last week for this funeral for Jimmy Carter, and that was so much of what people were saying, that there is this element of continuity between administrations, or at least there has been one historically. And so that's something I think we should all pay close attention to, the degree to which that heritage continues here with this transition, and how one picks up the ball from the other.
Joining us now for a 3-hour conversation, Javier Blas. His book was seismic a number of years ago. Look for the movie Memorial Day Weekend 2027. He joins us now, and it was going to be a light conversation on coffee, on olive oil. Javier, I can't go light this morning. I've got to go heavy crude on Brent and WTI up. Why are they higher?
Well, there are two reasons fundamentally. One is that the U.S. Treasury announced on Friday a number of sweeping sanctions against the Russian oil industry that got the market a bit ground-footed. It was a lot harder than many had expected, or we will have expected from the Biden administration departing only in a few days. More than 150 vessels affected, three big Russian energy companies affected, insurers, traders, etc., etc. That has really concerned some importing countries, notably India, that they have been relying a lot on Russian oil. And the other factor is that it has been rather cold here in Europe. It's going to be cold also in the United States in the next few days, potentially, and that is increasing the demand for heating oil.
This is important. Javier published this morning, and Javier, the chart you have, most of my listeners and viewers don't know. Saudi Arabia is out of the picture. I mean, you've got a Saudi oil twilight out there. If that's the case, and that's our perception, we're getting all our oil from the Mideast. No. Where are we getting our hydrocarbons?
Well, the United States is getting its hydrocarbons from the United States. It's just one of the beauties of the U.S. shale revolution is that production in the U.S. has increased high enough to supply the whole country. Some refiners in the United States, because of their configuration, still require a different crude that is not produced in the United States, but some of that is coming from Canada. A lot of that is coming from Canada, because we forget sometimes, we focus so much on what's happening on the Permian, but we forget also the Canadian oil production has increased significantly in the last few years, to the point that today the United States virtually imports almost no Saudi crude. It was at one point more than 1.5, 1.6 million barrels a day. Last year, using monthly and weekly data, we don't have final data, but my calculations point that the United States imported around 275,000 barrels a day. To find a lower number of U.S. crude imports of Saudi crude, you need to go back to 1985, almost 40 years ago, and that was a one single year. To find a sustained drop in in American oil imports of Saudi oil to something like we saw last year over a number of years, you need to go back to the 1960s.
It is a great piece, which I commend to everybody. And Javier, I wanted to ask you, sort of, given what you've been describing, the degree to which the U.S. is producing so much oil, how does that square with the rhetoric that we're hearing from the president-elect about his plans for energy in this country going forward? The drill, baby, drill of it all. What will that mean for the global oil market if it comes to pass?
Well, the problem is that the more the U.S. drills, the more that the U.S. produces, the more difficulty is for OPEC to keep prices where they are. But also at the same time, U.S. producers need high prices to be able to embark on drill, baby, drill. At the end of the day, I think that President Trump will ease a lot of restrictions for drilling in America. We will see at the margin more drilling that we will have seen otherwise if Biden have continued in the administration. But are we going to see a boom in American oil production with the growth that we have 5-10 years ago? I don't think so.
Right.
Are we going to see still a U.S. industry that is growing? Yes, I do think so.
Javier, we got to leave it there. I'm so sorry.
No
you
olive
couldn't
oil
touch. Well, he's been brilliant
Get him
on
back.
orange juice, olive oil, cocoa, and some real leadership on the high price of coffee. We'll do that again with Bloomberg Opinions. Javier Blas. Futures and down 38 with our news in New York City, John Tucker.
At least 24 people now confirmed dead, 16 others missing in the LA wildfires. Crews got a brief break from the punishing winds that have spread the flames across nearly 38,000. But another round of bone-dry Santa Ana winds in the forecast this week. Los Angeles County Fire Chief Anthony Maroney says red flag warnings in effect through at least Wednesday.
These winds, combined with low humidities and low fuel moistures, will keep the fire threat in all of Los Angeles County very high.
And LA Fire Chief Anthony Maroney says the National Weather Service has issued its most severe alert, a particularly dangerous situation warning for Malibu, the San Fernando Valley, and much of Ventura County. The flames have destroyed more than 12,000 buildings across nearly 38,000 acres. AccuWeather raising its estimate for the economic toll to up to $275 billion. Busy week of Senate confirmation hearings begins tomorrow for President-elect Trump's cabinet appointees. The defense nominee, Pete Hegseth, will be among those facing questions tomorrow. And Pangea policy founder Terry Haynes says he and others face a rocky process of advice and consent.
All these nominees have tried to figure out ways to make themselves more palatable to the Senate at large and be able to gain a majority of votes. But we really haven't heard anything from these nominees in the nearly 2 months since they've been put down. So it's going to take a little while to walk through these folks and frankly see if the votes are there.
Pangea policy founder Terry Haynes. The Supreme Court signaled it's likely to uphold a law that would ban the popular TikTok social app media platform in the U.S. if it isn't sold by its Chinese parent company by January 19th. Hearing arguments in Washington, a majority of justices suggested they see U.S. national security concerns as overriding the free speech interests. And Jeff Bezos' Blue Origin calling off the launch of its New Glenn rocket from Florida at the last minute after a few what they called anomalies were found during mission countdown. The Amazon founder hoped to close the gap with Elon Musk's SpaceX, but the rocket suffered unspecified issues, causing that launch to be abandoned this morning. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, David, Lisa.
John Tucker, thank you so much. Pierce Morgan in the FT this weekend on YouTube. He's all YouTube.
You are too.
It's a new trend. I'm
I know
out
you
front.
are. You were here. You were saying it before he.
It's amazing. And Ray YouTube, he's my lead advisor on this. Ray YouTube's brilliant. It's international. It's incredible. Subscribe to Bloomberg Podcast
Good morning, Mr. YouTube.
on YouTube. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. The tension-growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we have futures falling. The focus turns to more economic data, also bank earnings this week. Today, we have the New York Fed's one-year inflation expectations, but tomorrow, producer price index, followed by December's consumer price index on Wednesday. All right, bank earnings kick off Wednesday. JP Morgan Chase, Citigroup, Wells Fargo, BlackRock, and then Thursday we move on to Morgan Stanley and Bank of America. NASDAQ futures down 0.9%, 190 points. Dow futures, little change, down 37. S&P futures down 0.6%, or 35 points. Treasury yields extending last week's advance. Right now, the two-year yield's 4.39%, and that's little change. The yield on the 10-year, 4.76%, and that is little change. The Bloomberg Dollar Spot Index up about 0.1%. We have shares of Macy's falling down about 2.5%. Trimmed its sales outlook in the current quarter after the holidays just didn't deliver. Then you have Abercrombie and Fitch raised its fourth quarter sales outlook, better than expected holiday sales. But here's the thing, it just wasn't enough to reassure those investors that it can keep up that pace, so its shares are down 10%. And Moderna falling off more than 19% after it cut its 2025 sales forecast. Also slow demand for its COVID and RSV shots. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Paul and Tom.
Lisa, you nailed that. Paul, thank you so much for being with us. Paul's on assignment. David
Gura
Gura
when you're gone, we talk endlessly about where you are. Where's Paul?
I have no idea.
We have a whole thing about where you are.
He doesn't have the Gulf Stream.
Okay, all right.
Hopefully
with a cold drink
Francine
somewhere.
went to Costa Rica.
Wonderful.
So she had the Gulf Stream. That's all there is to it. This is a joy and a great honor. As many of you know, in all that we've done, we look at technology and try to avoid the cliche and the BS. Jack Kittery is one that has actually done it. And you know this when you know he published with Springer. For those of you that don't know the game, Springer is the adult reading. Any Springer book out of Germany is heavy lifting, and you go there to like the supposition principle on page 3. 1 over the square root of 2, 0 plus 1 over the square root of 2, 1. You know, you're there. It's Dirac and the rest of it. It's like heavy math, quantum computing, Jack Kittery on AI. Jack, I think we're ready for you on a Monday morning. The cardinal impatience now is when do we see the outcome of the AI capital investment? Do you have an x-axis? Do you have a calendar when this works?
Tom, good to see you and good to be with all of you today. This is going to be a key year for AI. Been a lot of promise, been a lot of hype. What's real? Where's the beef, as the commercial used to say? And I think what we're going to see is the rise and focus on B2B AI and on quantitative AI. The past 2 years, Tom and team have been really about consumer-oriented AI, about prompts, about typing things and getting haikus and college essays for kids. It's been about language AI, which again has many interesting applications, mainly on cost cutting. So if you are Delta, if you're Hertz, if you're Hilton, you have tens of millions of dollars of customer service costs. You can cut those costs with language AI. But 80% of the GDP of our economy is actually not driven by language, but by mathematical relationships. If you want to be a chemicals company, Dow, Grace, others, if you're an energy company, if you're a drug company, Pfizer, Merck, Lilly, you are driven by chemicals, equations, molecules. If you're a financial institution, again, language might be helpful to make sure you're on top of the SEC filings, but at the core is numbers, quantitative financial equations. Again, that AI is now hitting us this year. So I think we're going to start seeing the beef this year, next year, as we start seeing B2B applications using quant AI, quantitative AI, LQMs, large quantitative models, versus just LLMs, large language models.
Jack, I'm wondering what you're hearing from the companies with whom you're working or might be working, what their level of engagement is like with this kind of technology or where it might be headed. I think we were kind of in a moment after the initial kind of fervor and frenzy about AI where a lot of companies thought, we should get into this or do something with it. How much sophistication is there in C-suites across this country and around the world when it comes to how AI could be used practically by these companies?
It's a fundamental question. Over the past 24 months, we've literally been in the C-suites. They gather in large rooms at the top of their buildings. They invite folks like us in to give the AI talk and see what's going on. And initially, a lot of it was reflexive, to your point. A lot of it was, let's check the box as a company. Let's announce to our shareholders that we're doing something in AI. We've got an AI plan. But I think that that the bloom is off that rose, and I think now C-suites are getting more sophisticated. If you look at the drug companies as an example, their business model is one of the worst in the world. When you think about a drug company, it's a hit-based business. 90% fails, 10% succeeds. That 10%'s got to carry the 90% of failures. It's really not a great model at all because they don't have the predictive tools to figure out ahead of a clinical trial what is going to work and what's not going to work for that therapeutic, for cancer, for Parkinson's, for Alzheimer's. The promise of AI and what's happening right now is that we're beginning to bend that curve. And so drug companies, as an example, are beginning to shift from the reflexive, oh, we're using AI, to now a serious look at the tools that can bend the curve of success and failure in the actual trial.
Jack, help me here with AI and the idea of making a profit or not and the fear that it will harm us. Like, are you walking around? I mean, folks, this is a guy who actually got through Schrodinger equations. Okay, some of us mere mortals didn't. Jack, just to cut to the chase, is AI an evil thing? There's that tone out there, that tinge out there.
Well, Tom, it's a great question. First of all, thanks for the shout out to the book, but also to Springer. I agree with you 100%. The day that I found out that Springer would publish the book, and again, many people in the audience may not yet have heard of Springer, the publisher, but it's the #1 publisher in the technical and science areas, and they've done a great job. If people have trouble sleeping at night, Tom, the thing is to buy this book and make sure they get through 2 or 3 pages before they hit. No, it's a math-heavy book. It's a technical book. And the reason why it's technical and has code in it, the reason why, is that this stuff has to be made real. The only way to make it real is to put it in terms of the code that you actually implement. So, but I appreciate that shout out. To your question, I think that, you know, the initial fear of existential doom and Terminator AI, honestly, what I'm more worried about is less Terminator AI and more teenage AI. Right now, some of the AI models are in their teenage years. Teenagers have this characteristic, I think, as we all know. They often appear to be mature and responsible young adults, but every few weeks they remind us that they're not when the car doesn't come back intact or things like that. And so that's where AI is today. And what the concern that I would have is that we're giving, in some cases, in some sectors, too much responsibility to AI to run mission critical kinds of operations when we should be using AI as analysis, as prediction, but not necessarily to run mission critical stuff. But the bigger picture, Tom, to the macroeconomic picture, I know on this show very often you like to dig into that, is that over the longer term period, but now we're talking about a 10-year period, we're going to see a deflationary impact of AI, both the language AI, but even more so from the quantitative AI.
I got 30
and
seconds.
This could actually lead us, if I could, to one of the first periods of deflationary growth. We have to go back to 1870 in the United States to find a period of deflationary growth.
Jack,
Tom?
I'm out of time. I got to go study Schrodinger equations, and we'll have you back on. Jack Hidrow with us this morning. We're out of time this morning, but you can't say enough about...
This is the second law? That was Newton's second law. Schrodinger. I can't remember.
The second, you're killing me here.
I don't know.
This is that quality Cornell
go
education.
for that. Yeah,
right?
I didn't go too close to the engineering quad. Tried to steer clear. Are you worried about AI? You're not worried about AI. No, you're curious about it.
I am not. I look at it like the railroads, and Jack was brilliant there, folks, going back to 1870. And I go back to Clay Christensen and creative destruction. And he was a huge supporter of what I did. And we tragically lost Clay Christensen way too early. We're dealing with selective destruction of what we know. And there's a legitimate fear. And people like Jack, who actually can bridge to the fancy math, those are important voices to get to, rather than some earnings call where, great quarter, what's AI going to do for you? That doesn't work. That's an inside joke, folks. David Gura and Tom Keene, thank you for being with us. We continue. Lots of good things coming up. We're on YouTube. Subscribe to Bloomberg Podcasts, growing each and every day from New York City. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The sell-off continues as traders reassess the Fed's path right now. NASDAQ futures down 0.9%, 193 points. Dow futures, little change, down 29. S&P futures down about 0.5%, 34 points. The 2-year yield at 4.39%. That's little changed. And the yield on the 10-year, 4.76%. That is little changed. To commodities, oil hit a 4-month high. We'll start with Brent crude at $80 a barrel, up nearly 1.5%. WTI crude, $78 a barrel. We have spot gold lower, $2,666 an ounce. We go to Bitcoin right now. I want to point it out because it's down 3% at just over 91,000. Few companies in the news. We have Johnson & Johnson. They agreed to buy Intracellular Therapies. It's a biopharmaceutical company for about $14.6 billion, and that has shares of Intracellular up more than 34%. And it looks like Mets owner Steve Cohen, well, he has an even better year off the field. The Wall Street Journal reporting that his hedge fund 0.72. Well, they're going to return as much as $5 billion to investors after posting large profits. And finally, Shake Shack. It says it plans to have more than 1,500 U.S. locations in the future, smaller format stores in fast-growing areas like in the South. That is your Bloomberg Business Flash. David and Tom.
Can they put one by where I live and just, move it up 1 block away?
They're good.
It's like the offspring. Shake Shack 101. Good morning, everyone. Good morning on a January morning. Not as cold as it's been.
No.
We've broken that away. But right now, and this is a joy, let me first say, with the economic indicators and all we did Friday, what a jobs report show. Thank you, Ellen Sentner. Thank you, Claudia San. And our economic conversation and indicators are brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key political, key economic, and key climate indicators. Visit ibkr.com/forecast. Get started today. Thank you, Interactive Brokers. To interview David Gura is a good and wonderful thing. Let us start with the one remembrance of the Carter funeral. Give us the one moment that you will remember 5, 10 years from now.
When his grandson spoke about him as a person, somebody he called his papa, whom he visited in planes over and over again, and led a life that in private kind of mirrored how he was in public. I thought that was so beautiful and so poignant. Yes, there were efforts by former advisor to kind of take stock of the administration, what he accomplished as president, but that insight into him personally kind of confirmed what I think a lot of us thought we knew about him, that he was so fundamentally good and decent and cared so much about people all over the world in his post-presidency. So that'll stand out to me going forward.
A couple reads of the weekend. I mentioned Greg Ip in the Journal, just absolutely brilliant on tariffs and Trump. And another one was young Matthew Klein over at the Cook Political Report. He's like 15 years old. He's out of Emory. And you just can tell he's hardwired into the politics, David, which you do so well. And the answer is America looks totally different in 2032. We have a census in 30. Everybody's moving to Texas and Florida. That's the Matchbook study. But for the Democrats, it gets harder and harder. That's a summary for Klein.
That's a summary. That's the précis of the piece. And you're right. I think Democrats right now are doing a lot of postmortem about what happened in this last election, but they're reckoning with the fact that the demographics are changing so much, and that migration that you're talking about away from these strongholds to other states are changing the composition there. But Democrats are trying to piece together what their path to the presidency might be in future elections, and they're reckoning with what the legislature looks like at the state level and what it looks like at the federal level as well. So, yes, that census is going to be a kind of critical confirmation in a few years' time, but we're seeing this play out already, and it's something that I think is flummoxing a lot of Democrats and causing a lot of consternation for others.
What got the Twitter feed for Matthew Klein was the idea that the Republicans should be pro-immigrant because immigrants are moving to Republican states, and the math shows they're tilting Republican. Do the Republicans actually want more immigrants?
I mean, this is the question as we see this president-elect become the president, begin to push forward his rather hardline immigration policies and his plans to deport 1 million plus immigrants. We've heard from so many guests on this program about the potential economic consequences of that, but you look at what happened in the exit polls from the last election, the degree to which, as you say, immigrants to this country kind of voted more for Republicans than they have in the past. I think that this is going to fast become a political issue, and we'll see sort of how that tests Republicans who, by and large, have kind of gotten in line with what the president-elect has said about his immigration policy and how he thinks it should be pursued. We see Latino voters playing a bigger and bigger role here in securing the success of Republicans, so I think it'll be fascinating to watch, Tom.
David Gura, I look at the big take, and I guess on Thursday the big take can be about the confirmation process. What's the pressure for the Republican senators? Cronin, I heard of Texas, saying, look, you got to give the president major slack here. Do they pick one person to go after, or is it going to be a drilling across all of the conferences?
I think that we'll see Democrats drilling a lot of these nominees. But
what about Republicans?
I think we're not going to see a drilling by Republicans on any of these. The one that we were talking about with Zach Cohen just a little while ago is Pete Hegseth, the nominee for the Department of Defense. And there have been so many issues raised about his personal conduct in the past, but also his kind of professional comportment. And we think of him most recently as the host on Fox News. But before that, he helmed 2 veterans organizations, and as has been detailed in the New York Times and other media outlets, his tenure at both those places ended cataclysmically. And I think that there are questions to be raised about his capacity to run an organization, to be a manager, and you dovetail that with real concerns about how he's conducted himself personally. And Joni Ernst, we didn't talk about with Zach in detail. She, the senator from Iowa and a sexual assault survivor. She has been, coy isn't the right word, but unclear if she's supporting him or not. And I think if we see any fireworks, it'll be in that Senate Armed Services Committee hearing when she questions him and the degree to which she was able to kind of assuage her concerns, or if they're going to come out in full view at that hearing on Thursday.
I haven't got this out yet on Twitter and LinkedIn. I will. Admiral Stavridis with a brilliant essay Friday or Thursday on Greenland. David, a single sentence quickly. Militarily, Washington can offer increased defense resources to Greenland. Does that mean Russia takes Iceland?
I think that the Admiral is getting to something really important here, is that we're kind of distracted by what the president-elect is saying about his designs on or for Greenland. But as the Admiral has been saying for many years now, the Arctic is becoming incredibly important when it comes to protecting this country, other allies in Europe as well. And I think that there are many cooler heads here who are suggesting, move away from the bluster, move away from this rhetoric, and let's talk seriously about the importance of having some strategic position, a bigger strategic position in the Arctic and Greenland, a part of that, Tom.
We'll touch on that. David Gura there, and so much going on in Washington. Look for The Big Take this week, an extensive podcast doing quite well. Futures negative 45, now negative 36. The VIX up 2, now up only 1.65. With our news in New York City, John Tucker.
And Tom, in Los Angeles, the wildfires, the death toll now up to at least 24, and more than 12,000 buildings have been turned to ash in the Pacific Palisades and Altadena regions. Over the weekend, the firefighters did get a brief break from the punishing Santa Ana winds that have spread the flames across nearly 38,000 acres. But another round of wind gusts in the forecast this week. Here's Los Angeles County Sheriff Robert Luna.
The fires may be closer to being over. You hear that from our fire chiefs if it goes that way. But we do have this pending weather event. We are not going to de-escalate the number of people that we have out.
LA County Sheriff Robert Luna. The National Weather Service issuing its most severe alert for Malibu, the San Fernando Valley, and much of Ventura County. More than 7.7 million people are facing critical fire weather conditions today. Justin Trudeau says Canada is ready to respond with counter tariffs if the U.S. imposes tariffs on Canadian products. The outgoing prime minister said his government isn't looking for a trade fight, but will have to retaliate if the U.S. puts tariffs on Canadian products.
We are the #1 export partner of about 35 different U.S. states, and anything that thickens the border between us ends up costing American citizens and American jobs. That's not what President Trump got elected to do. I know he got elected to try and make life easier for all Americans, to support American workers. These are things that are going to hurt them.
Justin Trudeau making the comments on MSNBC. You're going to have to wait a little longer for the next space launch. Jeff Bezos' Blue Origin delaying the inaugural launch of its new flagship rocket to deal with an unspecified issue in the vehicle. The company says it's reviewing opportunities for the next launch attempt. The Bezos-backed firm trying to mount a challenge to Elon Musk's industry-leading SpaceX. Global news, 24 hours a day, whenever you want it. Bloomberg News Now. I'm John Tucker. And this is Bloomberg. Tom, David, and Lisa.
Currency markets, the litmus paper of the system, really showing something here. We had a 101 on euro, 102.15 now on euro. Weaker currencies across an ever stronger dollar. We had a 110 on DXY. The dollar resilient. From New York City on YouTube, Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. David Gura in for Paul Sweeney, John Tucker in for Michael Barr, Lisa Mateo, very here. We'll hear from her as well. We say good morning, and we must address again what has riveted our attention through the weekend and before. This horrific disaster. One of our reportings is the number climbing from 50 billion to 150 billion to something north of 200 billion. We're making it up as we go. Rob Carolyn joins us here on the weather as well. Rob, I want to get away from all the sniping and the politics of it, but it's here to stay. Whether it's climate change or not, I really don't care. Within all your study, what is the solution so this doesn't happen again?
Well, building fire-hardened buildings, Tom, and reducing the amount of vegetation. I think one of the things that has stood out to me is some of these photos of before and after is how close large trees, shrubs were up against a lot of these houses on the sides of these hillsides and mountains. And they're in a climate where they're pretty arid in Southern California. I mean, when the Bay was discovered there west of Los Angeles back in the 1500s, they called it Smoky Bay because there was wildfires there at that time. It's not something that's going to go away. So they really, going forward, when they rebuild, they're going to have to build houses that are fire hardened, and they're going to have to teach people how to, work around the weather. I think a good idea would probably put more reservoirs in Southern California so when it does rain, they can capture that water so they can use it in the events of fires. The Pacific lies to their west, and it's tons and tons of water, but it's salt water. And you really can't use it too often to put out fires because it changes the characteristics of the soil. And it's also, corrosive. For fire trucks, the water systems aren't designed to pump seawater. So it's really going to take some thinking about how we're going to mitigate this in the future so that they're not building with wood. They're using, materials that are fire resistant.
Rob, I'm reluctant to do a post-mortem here in real time while there is so much suffering, but I do want to ask you about the surprise factor here, and I think there's some geographic issue to that, too, that here in the East Coast we kind of woke up to the fact that this had gotten as bad as it had gotten a few days ago. How much of a surprise was this to forecasters to see this crop up the way that it did, to see it last as long as it has?
The Weather Service was all over this storm the previous weekend. They knew the winds were going to be bad. They had mentioned over last weekend that they were looking at a particularly dangerous situation like they're looking at for tomorrow and Wednesday. The problem is you can only do so much when you're talking about winds of 80 to 100 miles an hour passing through canyons. It's more or less we set up conditions for a firestorm, and that's exactly what happened. Once these flames got going, there wasn't anything that was going to be able to stop them other than a rainstorm, and that's why this fire is continuing. We need rain in Southern California, and it's not in the forecast anytime soon, though it does turn cooler and more humid by the time we get into the upcoming weekend.
Quickly, Rob, too quickly, south of LAX, do they have the same terrain as the Pacific Palisades?
Not as much time until you get into the areas around San Diego. It kind of flattens out a bit. The hills aren't quite as high. The coast kind of changes, and you get this eddy, which forms off the coast of San Diego in the Pacific that actually helps bring moisture inland to those areas well south of Los Angeles that you don't see in the Los Angeles area. So that they get the fog and the mist, and that actually helps them out a bit. But it looks like this batch of wind coming up for Tuesday into Wednesday is going to be another problem for Ventura and LA County.
Interesting. Thank you so much, Rob Carolyn. Greatly, greatly appreciated this morning. Just can't say enough about his work, and frankly, all of Bloomberg. And Lisa Mateo mentioned this. I thought Lucas Shaw was phenomenal last night. He devoted the first half
Screen
of his
Time newsletter, yes. Well worth reading,
there.
everybody.
Speaking of the energy, Mark Cohen's Walking in Memphis was about all of that energy of Stax Records. Sam Moore.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, selected members. Off today. David Gura in for Paul Sweeney, driving forward that conversation. And so timely given the politics that we see in Washington this week. The politics of the market is simple. Continued weight to the tape and in the yield space. Yields move out. I came into a new high in the 10-year inflation-adjusted yield, 2.33% right now, 2.30% in the 10-year real yield. That's what I pay attention to. I'm out near 5% on a 30-year bond, 4.95%. Gura doing a calculation on a 30-year mortgage. You wonder what it does to the housing market.
Well, nothing good.
Yeah,
I think we've seen that over these last few months.
I think we're at
we'll
nothing
talk about
good
that
right
in a few
now.
minutes. I think. Yeah, it worsens yet.
Yeah, I mean, we'll just have to see. The dollar, of course, is the litmus paper of the system, giving me a strong dollar. DXY for the pros. The blended major trading currency index out to a 110. That is a shock. Japan doesn't move, but Euro does. I had a 101 on the way to parity. We're not there yet. Jordan Rochester at Missoula with a really smart note this morning on the path to parity. Cable, road trip, London, 121.36. On pound sterling as well. We say good morning on your commute across the nation and, of course, on YouTube. Subscribe to Bloomberg Podcasts. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures lower. Analysts kind of rethinking their Fed rate cut predictions after Friday's big jobs report. We have NASDAQ futures down more than 1%, 239 points. Dow futures down 0.1%, 71 points. S&P futures down 0.7%, or 44 points. As you can see, tech shares really getting beat up this morning. Tesla down nearly 3%. Palantir Technologies down more than 3%. NVIDIA down nearly 3%. We go to the 2-year yield, 4.39%, and that's up 1 basis point. The yield on the 10-year, 4.77%, and that's up 1 basis point. Oil climbing to a 4-month high. We have Brent crude up more than 1%, $80 a barrel. WTI crude, $77 a barrel. The Bloomberg Dollar Spot Index reached its highest in more than 2 years. It's up about 0.1%. Bitcoin down this morning, more than 3.5% at just over 90,000. Bitcoin buyer. MicroStrategy down more than 4%. And shares of Howard Hughes up 9%. Bill Ackman's Pershing Square Capital Management proposed a merger with the company at about $85 a share. And finally today, JP Morgan hosts the first major healthcare gathering since the death of United Healthcare CEO. You have industry leaders from more than 500 companies scheduled to present. That is your Bloomberg Business Flash. David and Tom.
Thanks so much, Lisa. Greatly appreciate it. Lisa mentions the Bloomberg Dollar Index. That's the index I actually chart, and that's the one I follow. It's much more EM, much more China. It's more holistic about the global economy, where DXY, which Jay Hatfield has followed since about, I think, 1946, maybe 47, is the major trading partners, and critically doesn't include renminbi or yuan in it as well. Joining us now, we get a huge response when he's on. Jay Hatfield joins us out of UC Davis and Wharton with Infrastructure Capital Advisors. Do you maintain the bullishness that kept you in the market last year?
Well, thanks, Tom and David, for having me on. Well, I think it's important. We have a 7,000 target, but it's important to note that assumes a 375 10-year. And every 25 basis points is a full S&P multiple. So if you told me with absolute certainty the 10-year would be at 475, my target could be right around where we are. However, we are highly confident in our view that this, as you already mentioned, Tom, that the best cure for higher rates is higher rates. So we're in a housing recession already, 2 quarters of negative growth. It's only going to get worse. Had 120 basis points of tightening in the last 3 months. So, but we do have to be correct about that to be bullish about the market.
But this is so important, and this is, on the edge of a Hayekian thing. Hayek didn't exist at Wharton, but that's a different story. The market has to clear, and you need a mechanism to clear. Discuss how high rates, yields up, price down, clears the market so American capitalism can move forward.
Well, you already mentioned it. DXY or the Bloomberg Index, maybe I'll convert to the Bloomberg Index, is critical. and never mentioned, which shows there's a lot of political bias out there in the economics world, because if you wanted to create one thing that's highly deflationary, it would be raising the value of the dollar 10%. And by the way, you export inflation to everyone else. That's completely ignored. Everybody wants to focus on tariffs, but ignore the fact, well, we've already offset the potential tariffs that haven't been passed. But so we're going to have slowing growth because of that strong dollar.
I want to ask you, going back to yields, what is it telling you, the move that we've seen, and how worrisome is it that this is cropping up as it is?
Not very worrisome. 100% of it, and there was a good story on the terminal that sort of said the same thing. 100% of the move is pessimism about Fed rate cuts.
I see.
It's not because everybody thought the deficit is going to be worse. You can if you just take the terminal rate on Fed funds and add 100 basis points, terminal rate right now is 370 per the market, and then you add 100, which is normal over the last 50 years. That gets you to 470. So you can explain it precisely with Fed policy. Now, the good news is the Fed is almost always wrong. So if they're raising their inflation forecast, they should probably be cutting it. And that's what, we're not cutting it, but we're still forecasting 2.1 at the end of next year.
John Wrightingham, when he's at Bear Stearns and now at Breen, is brilliant on this as well. But Jay Hatfield, I want you to codify how we shouldn't panic with higher yields. You're expert at that. Why should I not? I'm seeing so much OMG, the world's coming to an end out there. I don't buy it. Discuss.
Well, normally it would trigger a recession. 11 out of 12 recessions were triggered by higher or Fed rates increases, higher long-term rates, and a meltdown in the housing market, hence the Hatfield rule for recessions. If you go below 1.1 million starts, you have a recession. And so, but we had this situation that we are obviously all focused on. We have massive tech spending that's offsetting that. So we're only projecting a slowdown in growth to 1% to 2%. That'll give the Fed time to cut rates because they're dumb, but they're not stupid. So if the data, they usually can interpret real-time data to some degree. So if we have declining inflation and the slowing economy, which should reduce labor growth, then they'll figure it out. So we're still projecting 3 cuts. They missed the first quarter, then cut.
Jay, let me ask you about financials, bank stocks. I know that you've been a fan of them, right? I think that you've been a fan of them in recent days. How does this sort of affect your sense of them? What are you looking for as we get earnings this week from the big banks?
Well, I'm glad you mentioned that because even if we're wrong about rates, we still like the investment banks. Mm-hmm. So they're not really subject to much net interest margin pressure, but they have these two powerful dynamics they're going to hold as long as we don't have recession, which is the AI IPO boom, probably second half, but the M&A boom's already starting. There's already been a lot of activity. It's not normal, actually, the first week of the year. But so those two factors, we think, make investment banks a buy in kind of all circumstances.
I'm going to take a chance here. With your work at Morgan Stanley, with your work at CIBC Oppenheimer, with your deal making, Jay Hatfield, a first stab, how in God's name do we rebuild Los Angeles? Do you just see a massive government support, or do you have something more creative? Totally unfair question, but I have to
Well, I'm from California, so I have a little bit, at least understand the geography. My mother was born in Whittier, which is not far from the fire zone. I mean, I think that there's going to be some insurance payments, but I had a house in Northern California, and they just cut off all of the insurance. It was up in Tahoe, but so I think a lot of those homes weren't insured. So there's going to have to be government support. If people have total wipeouts that were somewhat unforeseen. And then there needs to be fire mitigation. Nobody's going to...
What does that mean?
Controlled, I don't know, but controlled burns. I mean, my father used to
do a controlled burn of the fields, the mountains.
Right, or you actually create a fire barrier. You have a large highway. People don't like it. It's hard to actually get it located. But so you have to have these plans. You have to have more money so that then the insurance companies can actually provide insurance.
To you, is it like the San Francisco earthquake?
It looks as bad. It looks like, as far as I can tell from aerial photographs, there isn't a Pacific Palisades left.
Yeah.
It looks like San Francisco because that was a fire.
I thought 60 Minutes did a great summary of it last night. And there's a corridor, David Gura, in San Francisco at the Mark Hopkins Hotel with a long black and white photograph of, I believe it was 1906. Wow. It looks the same.
Exactly. Well, that was a fire. It really wasn't an earthquake, but a fire.
Yeah. Jay, thank you so much for joining and giving us perspective there on your California as well. Jay Hatfield with Infrastructure Capital Advisors. Joining us now, David Gura and Tom Keene in New York. And we migrate over with really a continuation of the discussion. Regina Mayor joins us, Global Head of Markets, KPMG, as well. Regina, how does KPMG on a first stab assess the California fires?
Well, I think everyone's still just trying to come to grips with what it will all mean. And I think right now a lot of folks are simply focused on the human tragedy that we're watching unfold in front of our eyes. Obviously we have folks that look at what's the potential damages, what might this mean for the insurance agencies or the insurance market itself. And of course, I pay attention to what does this mean about the future of utilities and electrical provision and infrastructure from my seat at the table.
So what do you see about utilities besides, the litigation and the snarkiness and all that? That's the modern age. Maybe it happened in the San Francisco earthquake. I don't know. But what do the new utilities look like after this shock?
Well, I think the utility systems will continue to look in large part the same. I think what I've been paying attention to is obviously the investor reaction. If you look at some of the stock performance of the local utility, just to give you one example, they've already lost $4.3 billion in market cap. And that's probably greater than what the potential liability would be, even if they were to be found liable, which no one understands where the source of these fires have come from yet. So I'm not implying at all that there's any culpability. But the investor response is quite out of whack. So I do think that we need to look at what other options we have. Can we transition more to small scale nuclear reactors? I do like the move toward maintaining our baseload nuclear infrastructure, making sure that we have more options to provide electricity. And then, of course, the other thing was water pressure, because water pressure is a lot of times driven by electricity. And even the local water and electrical group in LA was saying that they did not proactively shut off electricity for the reasons of keeping water pressure on. So I don't think we have any sense yet of exactly what is transpiring. And I do think there will be some lessons learned, like there have been for multiple fires that have happened in California, and it'll continue to affect the landscape of utilities across the country.
Well, let's go down that path that you just kind of led us down, and that is the future of nuclear energy in this country. And it's something that's had a lot of currency lately, I think, in the context of the surge in growth we've seen in AI and the demand that's placed on the power grid just to power the data centers that are being built to sustain it. Do you sense that there is a change in appetite or appreciation for the role that nuclear power could play here in the U.S.?
It's definitely experiencing a renaissance, which I find quite encouraging, because personally, a decade or so ago, I was quite distressed that we were prematurely shutting down nuclear assets. And now I see us giving tax credits and incentives for keeping these assets more in play. You've seen some of the recent announcements with some of the large tech players partnering with utility providers to restart nuclear facilities. This is strong baseload infrastructure that's already connected to the transmission grid, and you wouldn't have to provide necessarily new infrastructure. Building new ones, though, prohibitively expensive, as we've seen from some of the new reactors that are coming online. But I do think that there's more of an appetite, and it's driven by the tech companies that know that they need this. A recent survey that KPMG did, we found that 55% of our tech buyers were willing to pay 50% or more for electricity to ensure that it's reliable and sustainable.
I've been thinking a lot about this, Tom, in the context of Jimmy Carter, who I've been marinating on what he did in the Navy when he was working on the nuclear sub program, and it was something that kind of frustrated him throughout his life, was this kind of popular opinion turning against the nuclear industry when he was someone who actually thought that it was quite safe and executed in such a safe way.
Yeah.
Regina, we were talking earlier just about oil and where it's headed. We were talking with Javier Blas just about sort of the rhetoric that we're hearing from the president-elect about this drive to produce more oil here in the U.S. and how that will affect the global oil market. From your vantage and with your experience in the world of energy, how do you see that playing out here over the next year, 18 months, the pressure that presumably this new president will put in place to increase production here in the U.S. as we're seeing prices where they are?
Well, I think that the industry is producing as great of an amount as they possibly can. And you see that continuing to inch up. We've continued to have record amounts of U.S. production. First it was 13.2, then it was 13.3, then it was 13.4 million barrels per day. So I do think the industry is producing more because the price environment is positive. What could happen with the new administration that would be positive from the industry's perspective is more leasing opportunities in the Gulf of Mexico. And what the industry has asked for is improvements in the permitting process. That end-to-end permitting process, when you even look at pipeline right-of-ways, not just drilling, is a bone of contention. And I think there's a lot of optimism that the new administration will be able to help with that. When you think about other things like drilling in the Arctic, if you'll notice, the Department of Interior got 0 bids for the latest round of potential ANWR drilling opportunities, and all of the leases that were taken in 2021 have all fallen into forfeiture. So I don't think it's going to be expansive into new areas, but if you ease the opportunity to drill in the places where the industry is very comfortable and you create more opportunities in the Gulf, which is quite prolific, I think those could have some longer term impacts. It's not a 12 to 18 month story, though.
Brilliant. Regina Mayor, thank you so much. Affiliated with Rice University, Houston, Global Head of Clients and Markets, KPMG as well. Futures, again, negative 44, a weight to the tape. The VIX over 20, 21.40. With our news in New York City, here's John Tucker.
All right, guys, thanks very much. At least 2 rounds of vicious, dry Santa Ana winds expected to blast through Southern California early this week, bringing powerful gusts that will challenge fire crews struggling to contain 2 destructive blazes and likely force thousands more residents in that area to evacuate. This disaster is on track to be the costliest in U.S. history. AccuWeather has raised its estimate for the total economic losses to up to $275 billion. And FEMA Administrator Deanne Criswell says things will need to change when it comes to rebuilding this region.
We have a lot of science and technology out there that shows ways that we can make these homes stronger and more resistant against these fires. That's really where we need to focus our efforts as we move into the rebuilding phase.
FEMA's Deanne Criswell appeared on Face the Nation on CBS. California Governor Gavin Newsom has issued an executive order that suspends some environmental and regulatory hurdles to speed up the rebuilding process. The death toll, at least 24. President-elect Trump's cabinet choices, they'll begin facing Senate confirmation hearings this week. On Thursday, the Treasury Secretary nominee Scott Bessent will answer questions. Let's get more in this report from Bloomberg's Doug Krisner.
Bessent is founder and leader of the macro hedge fund Key Square Group. If he's confirmed, Bessent will immediately resign. And a document released by the Office of Government Ethics indicates Key Square would be wound down at the end of March. Bessent will also divest underlying assets to avoid conflicts of interest. He's disclosed assets worth at least $521 million. Some of Bessent's potential conflicts will take longer to resolve. He has invested at least $250,000 in 3 funds that allow him to withdraw no more than 25% of its holdings each quarter. In New York, I'm Doug Krisner, Bloomberg Radio.
And hospitals across the country dealing with a wave of respiratory illnesses. The CDC says at least 35 states seeing high levels of flu, COVID, RSV, even the common cold. So far this season, the flu alone has sent more than 63,000 people to the hospital and caused at least 2,700 deaths, including 11 children. Now, pediatric units especially overwhelmed, with some hospitals hitting 95% capacity. And you know, one of the easiest things to do to protect yourself, just hand wash. Because it's remarkable how many times we actually, with our hands, that might be with germs,
but that's
touch our faces.
Surveillance. That's a surveillance hand wash you've got.
John Tucker passing the Purell around the studio. Yes.
Tom calls this a mixer after work.
Just a whisper of that on the.
We have right now a team, as we're all in the studio here, led by Lisa Mateo in Egg Update. I tried to buy a dozen eggs, I think, on Saturday. Not a chance, Lisa.
Well, I had to send my son out to go get it because I went to the store and there were none.
No
so
eggs.
He had to get out, and it was expensive. He came back. He's like, "Mom, did you know how much eggs cost?" I was like, "Yeah, no kidding." The price is ridiculous.
It's like.
Well, you've got hens up on the roof, right?
We do.
Yeah.
We do. We've got
the hen house.
Don't tell the mayor. But it's the flu, right? I mean, this is all because of the bird flu. We need eggs because.
Avian influenza, yeah. And it's happened before.
It's real.
Good morning, David Kotak in Florida. He's put a lot of work into studying the bird flu. We'll be following that through 2025 as well. We're out on YouTube. Subscribe to our new distribution. Subscribe to Bloomberg Podcasts. Good morning from New York.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by Interactive Brokers. Trade over 10,000 U.S. stocks, ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. All right, we've got futures retreating, and this is as a focus turns to more economic data. Also, bank earnings this week. So today we have the New York Fed's one-year inflation expectations. Tomorrow, the producer price index, followed by December's consumer price index on Wednesday. Bank earnings kick off Wednesday. We have J.P. Morgan Chase, Citigroup, Wells Fargo, and BlackRock. And then Thursday, we move on to Morgan Stanley and Bank of America. We'll start with NASDAQ futures because they're down more than 1%, 247 points. S&P futures down 0.8%, 46 points, and Dow futures down 0.1%, or 66 points. We have the two-year yield at 4.39%. That's little changed, and the yield on the 10-year 4.77%, and that is little changed. The Bloomberg Dollar Spot Index up about 0.1%. We have Macy's shares. They're down nearly 2%. Trimmed its sales outlook in the current quarter. Then you have Abercrombie & Fitch raised its fourth quarter sales outlook. Better than expected holiday sales, but here's the thing, it just wasn't enough to reassure those investors that it could keep up with that pace. Its shares are down nearly 7%. And finally, shares of Lululemon up 2%. The company raised revenue and profit guidance for the fourth quarter. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Tom.
Thanks so much, Lisa. Wrapped around the market opening here. We're going to get to that in 4 minutes. We have Mark Zandi with us. Out on Twitter, there's a lot of mediocrity led by me. There's people worth following, like D. Gura. Follow David Gura. Jason Furman, I think, up at Harvard. Whether you agree or disagree with him, Professor Furman's really engaging the brain. And someone else, whether you agree or disagree with him, is Mark Zandi. We're thrilled he could join us right now from Moody's. Mark, you're on fire out on Twitter, and you're, of course, saying all eyes should be on the bond market. Do you link bond market to stock market future?
I do. I think as long-term interest rates push up, that puts pressure on multiples, particularly for previously high-flying or currently high-flying stocks, technology stocks that are valued based on earnings way out into the future. So as long-term rates rise, that puts pressure on multiples and puts pressure on the equity market. So yeah, I think they're very closely linked, Tom.
Have we lost a disinflationary vector? Have we just given up on some form of arrow, whether it's a John Williams 2% or something higher? Have we given up on that vector?
Well, it's going to get tricky here. It was tricky even before tariffs and deportation and deficit finance tax cuts. But with the prospects of that dead ahead, those are inflationary. I mean, how inflationary obviously depends on the policies that are ultimately implemented, and that leads to there's of course a lot of uncertainty around that. But I think directionally, yeah, it's going to be a lot more difficult to get to the Fed's 2% target and stay there. So I don't know, we should give up on it forever, but at least in the foreseeable future, I think it's going to be much more difficult to, I think, get inflation back in the bottle completely.
Mark, how are you and your colleagues finding your way through that uncertainty? So as you say, we don't know a whole lot of detail here about these three kind of marquee proposals from the president-elect when it comes to tariffs and deportations and tax policy, what he and his colleagues intend to do. At this point, how are you beginning to forecast that? How are you thinking about the potential, the effect it's going to have on inflation going forward?
Yeah, that's through scenarios. We have our, like everyone else, a kind of what we call a baseline scenario, kind of in the middle of the distribution of possible outcomes, and that's our best guess as to what policy is going to be. Economic policy is going to be here around the tariffs and deportation and fiscal policy, the tax cuts. How much of that's going to be deficit financed, and all the other things that are going on here with regard to Fed independence and regulation, less regulation. What does that mean for growth? All those things. But because of the high degree of uncertainty, we run different scenarios. Scenarios where the tariffs aren't quite as significant. They're not on as many countries across as many products. They don't remain in place for very long. But this goes to a very important point, and that is the uncertainty itself is a weight on economic growth. And that's one of the, I think, underappreciated downsides of things like tariffs, because they are so complex and opaque. There's going to be a lot of changes here. It's moving around all over the place. Business people are going to have a hard time with that. They're not going to be able to make concrete decisions around that. They're not going to invest, and that's a significant weight on economic growth moving forward.
We're going to come back with Mark Zandi with Moody Analytics here. Lots to talk about, dovetailing economics into finance, into investment. Again, earnings week upon us. David Gura and I have just barely touched on it, but big week starting out with bank earnings as well. Part of that is a market opening where there's a bid and an ask out there. We do that here at 9:30 Wall Street time. Futures -47. Here's Lisa Mateo.
Good morning. Yeah, and futures have really been taking a hit so far this morning. They've been down more than 1%, NASDAQ futures. So right now we want to get things started. We'll head over to the S&P 500, off and running. Down 0.9%, 51 points at 5,778. We have the Dow. That's down 0.1%, 39 points at 41,892. And finally, the NASDAQ, still lower, down more than 1%, 260 points at 18,897. The two-year yield, 4.39%. That's little change, and the yield on the 10-year 4.77%, and that's up about 1 basis point. Have to point to commodities because Brent crude $80 a barrel, up more than 1%. WTI crude $77 a barrel, up more than 1.5%. We have spot gold lower at $2,668 an ounce. As far as currencies, we have the Bloomberg dollar spot index up about 0.1%. The Japanese yen stronger. The euro down 0.3% at 102.08 against the dollar. The British pound weaker as well. We have Bitcoin down more than 3%. At just over 97,000. That is your Bloomberg opening bell report. David and Tom.
Thank you so much, Lisa. Appreciate that this morning. Again, I'm watching currencies more than anything, and they show stronger dollar. With us, Mark Zandi of Moody's Analytic. I take great issue with the fear about a Plaza Accord, Dr. Zandi. Greg Ip, with a spectacular essay in the Wall Street Journal, I put it out on Twitter and LinkedIn, really going after Dr. Mirren, who will be the economic advisor for Mr. Trump. Mr. Mirren suggesting that dollar adjustment, like a Plaza Accord, where we would force a weaker dollar, is one outlet for America. How do you force a weaker dollar, Mark Zandi?
I don't know, Tom. It's a great question.
It's a setup because I know Zandi had smoke coming out of his ears. A wise one from Pennsylvania. Please discuss the gentleman from Cambridge.
Yeah, I don't get that one. I mean, especially if you have Fed independence. I mean, I suppose you could capture the Fed and get them to do whatever you want, and maybe that pushes down the value of the dollar. I don't know. I mean, if you have broad-based tariffs, buckle in. It means a higher value of the dollar. I mean, I can't imagine the Chinese not using their currency as a way to address higher tariffs, right? I mean, so. Yeah. And the U.S., given where the U.S. economy is, I just don't see it. So I don't know. I'm perplexed by that. Well, there's a lot of policy proposals out there that are, we're hearing about that I'm perplexed about, but that's at the top of the list. I don't get it.
Mark, we got to leave you there. We got to get you back soon here on tariff analysis. Zandi on fire out on Twitter, huge value add. Whether you agree with Dr. Zandi or not, of course, with Moody's Analytics. David Gura, my single sentence I emphasized in the Greg Ip tour de force was this vacuum that our three major trading partners, China, Mexico, surprise Vietnam, that they won't react. And that's immediately where Mark Zandi went. You think the Chinese aren't going to react off currency to anything we do?
And we've heard a bit of tape from this morning, but Justin Trudeau, of course, the outgoing Prime Minister of Canada, talking a bit about what our neighbor to the north has planned if the tariffs are put in place that President-elect Trump is proposing. And, we saw a limited version of that during the first term, but I think that things could get messy pretty quickly here.
Did they shut down the bridge to Windsor, Ontario?
That's right. Wow.
I mean, that's basically what we're talking about.
Yeah. And,
we're not talking about codfish off Newfoundland.
No.
We're talking about serious, the corridor down the Mississippi River.
And energy as well. I think we've kind of touched on that a little bit this morning as well, but we get energy from Canada as well, and that could have some huge ramifications for those border states if this happens.
I watched some Bruins hockey this week.
You did?
Yeah.
What's your sports diet these days?
My sports
Entirely
diet's
hockey?
Less.
It's less.
Less.
Okay.
My sports diet is less. I'm watching the Bills.
Yeah.
They did well.
Yesterday,
Buffalo Bills did, they did not mail it in, to say the least. But mostly I rely on Michael Barr.
For the updates.
We
miss him.
He keeps me into it.
Back later this
John
week.
Stashower killing it for us with his sports report. I listen carefully to that as well. What we listened to, hey, green on the screen. Lisa, you didn't tell me there was green on the screen. Dow up 26 points.
It's just changing.
Fraction. This goes to the earnings season. I think the earnings season, Gino Martin Adams and others saying, hey, pay attention. And we'll do that through the week with JP Morgan leading up. Look at Delta Airlines, the Gura fam, business class.
Booking our
keeping
tickets,
Delta, keeping Delta in air. Please stay with us across the nation in Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We have stocks mix, and this is as traders await key inflation data this week and also the kickoff to earnings season. We'll start with the NASDAQ because it's down more than 1.5%, 304 points. The S&P 500 down about 0.8%, 50 points. Where we're seeing a bit of a lift, that's in the Dow. It's up about 10 points. We have the two-year yield, 4.39%, up about 1 basis point. The yield on the 10-year, 4.77% of that's up about 1 basis point. The Bloomberg Dollar spot index, well, that's up about 0.1%. I want to check in with chip stocks because the U.S. imposed caps on how many advanced AI chips can be exported to certain countries. So you have NVIDIA down more than 3.5%, Intel down more than 1.5%, and Broadcom is little changed right now. Also, big tech like Tesla and Apple also taking a hit this morning. Tesla down more than 2.5%, same for Apple. And finally, shares of Moderna, they're off about 22%. This is after it cut its 2025 sales forecast, slow demand for its COVID and RSV shots. And finally, yes, dry January is upon us, Tom. Experts say giving up alcohol for the month, it can save you money, at least $301,000. There you go.
You know, I saw Dry January and I thought it was an ad for Williams-Sonoma towels.
Oh my God.
You know, like, 40% off. Williams-Sonoma, the stripy towels.
Yeah.
That's what I thought
To
Dry
each his own.
January was.
No.
Yeah.
It's amazing. I mean, folks, you got to understand my world. I'm here at 3 a.m., me and Lisa, and we're like preparing, and, we have these long, long meetings with our interns. Gura shows up at 6:58. I mean,
I took you literally. You tweeted out 6:59:30. I thought,
Damien shows up 30 seconds.
Sure.
Then there's Balchunas who shows up, in the middle of it all. Nice to see you. Good morning.
Good morning.
Have we ever seen in your... I don't care. Give him a second.
He ran here from Philadelphia.
Give him a couple of
That's the headline.
Let's move on. Eric Balchunas, have we tested ETFs in a down market? Do we really know how they behave in a correction, an 18% bear market, or a once every whatever years down 35%?
Yes. So 2020, March 2020, was the ultimate shock. To me, that tested out a lot of ETFs.
What'd you learn?
Okay, here's what I learned. In the case of bond ETFs that hold less liquid stuff, let's go with HYD, the high yield muni. That's probably the canary in the coal mine in terms of the most illiquid. That traded at discounts of up to 29-30%.
Off value.
Yes.
Wow.
However, a lot of those bonds haven't been marked since the crisis, so the NAV is arguably not correct. So a lot of traders understand this. That's why HYD is just as popular today. They get it. They're like, okay, HYD is the true market for these bonds right now, but some of the bonds don't trade that much, so that they aren't marked since the crisis started.
They arbitrage that.
Yes.
You can't say arbitrage unless you spent 4 days in Coral Gables at an ETF summit, just so you know.
But it's a good question. And Tom, every crisis we've had, in my opinion, is where new ETF fans are born. 2008 was the first one. After that, LQD, TLT, these bond ETFs did okay. SPY did great. SPY traded through 9/11. A lot of this liquidity is available where it's not available elsewhere. So a lot of traders, institutions are like, yeah, I'm going to use the ETF. I can actually move, take my risk off, buy it, whatever. And so the ETFs actually are a release valve and a liquidity source when there is none in some other areas. And I think traders understand that. So when they see a discount in TLT of 2%, they're like, well, of course, some of these treasuries are really tight right now. Nobody's buying them. So, of course, there's going to be a little bit of a discount. I'm okay with that. Mom and pop, they usually should hold through all this, like the Vanguard people. Doesn't bother them. But the traders, I think, understand.
Really
that,
well explained.
Yeah. And the premium discount, to your point, we call the arbitrage band. Because that's the point in which arbitrage happens.
They open for Captain and Tennille.
Yeah, say they were your backup band.
Arbitrage band open for Captain and Tennille.
It is a good band name.
David, get in here, please.
Eric, how different is this world from back in 2020, and what does that say about the way that it would handle a crisis going forward? I mean, we know so much of how much interest and growth there's been in ETFs broadly, but what does the universe look like? How different is it from a few years back?
It's grown. There's more assets for sure, but and there's some new products like double leverage MicroStrategy. We think one of these products like that one could terminate like XIV style, because if MicroStrategy goes down a significant amount, that thing just can't handle it. So if we have a real COVID type crisis in the stock market where there's limit up or limit down days, one of these single stock leverage ETFs probably going to bite the dust. But in 2020, we had a lot of triple leverage ETFs that bit the dust.
Watch yourself
So
here.
we seem to have a sort of natural culling of the crazy stuff in crisis periods, and it seems to be okay with everybody.
I got one final question then. Is Bitcoin the crazy stuff?
Maybe. Yeah, it's hot sauce. I would say a double leverage MicroStrategy is more crazy because MicroStrategy is double X Bitcoin, and 2X MicroStrategy makes that 4X Bitcoin. So MSTX and MSTU to me are the maybe XIVs to watch for the next sell-off.
Right.
Bitcoin itself, we've seen it. It can go down 80%. It comes back though. So that said, I think there's more ETF holders, stronger hands, more advisors that won't sell. So I don't know if it has that big of a sell-off this time around.
The Ghost Reaper of hot sauces, I think.
Let me explain this to you for your entourage. This show is so successful that people hover around our wonderful studio here so that if a guest is late, we just we don't even know who we're talking to. We just pick up a new guest. So, you gotta try to get in here 30 seconds
he made
earlier.
it. He was here.
So just so you know, I have a half an hour buffer built into my travel time. And Amtrak always eats into that, almost like 25% of it. And today the subway was a little late. So it was like 90% Amtrak, 10% subway.
Right.
Ate into the 30 minutes, but I
surveillance
still got
buffer.
here. I made it up with my legs, Tom.
From Grand Central.
Well, no, Penn Station, because then I got to take the NRDR. It's quite a process to get over here from the west.
Tom doesn't take any mass transit, so this is
Hey, I listened to NRBQ this weekend. Leave me alone. Eric Belchunas, thank you so much. Greatly appreciate it this morning. It's brilliant there on ETFs and, the select group of leverage, double, forple leverage. Notice he did not mention triple leverage all cash fund.
You haven't started your ETF yet.
No, it's in
You should.
registration.
Yeah, okay. All
It's
right.
in registration.
Yeah.
And Sullivan Cromwell. And,
Good. You picked a good firm. That's good.
They sent me the estimate for the legal bill. I was
Yeah.
like, gas. Oh. Dow up 100 points. With our news in New York City, here's John.
All right, let's get the update on the fires out in Los Angeles. At least 24 people now confirmed dead, 16 others missing. Crews got a brief break from the punishing winds that have spread the flames across nearly 38,000 acres, but another round of bone-dry winds is in the forecast this week. The Los Angeles County Fire Chief Anthony Maroney says red flag warnings in effect through at least Wednesday.
These winds, combined with low humidities and low fuel moistures, will keep the fire threat in all of Los Angeles County very high.
And LA Fire Chief Anthony Maroney says the National Weather Service has issued its most severe alert. This is a particularly dangerous situation warning for Malibu, the San Fernando Valley, and much of Ventura County. The flames have destroyed more than 12,000 buildings across nearly 38,000 acres. AccuWeather raising its estimate for the economic toll to up to $275 billion. A busy week of Senate confirmation hearings that begins tomorrow for President-elect Trump's cabinet appointees. The defense nominee Pete Hegseth will be among those facing questions tomorrow. And Pangea policy founder Terry Haynes says he and others face a rocky process of advice and consent.
All these nominees have tried to figure out ways to make themselves more palatable to the Senate at large and be able to gain a majority of votes. But we really haven't heard anything from these nominees in the nearly 2 months since they've been put down. So it's going to take a little while to walk through these folks and frankly see if the votes are there.
Pangea Policy's Terry Haynes. The Supreme Court has signaled it's likely to uphold the law that would ban the popular TikTok social media platform in the U.S. if it isn't sold by its Chinese parent company by January 19th. Hearing arguments in Washington, a majority of justices suggested they see U.S. national security concerns as overriding the free speech interests of the companies and content creators. Assembled justices cast the law as being focused not on speech but on ByteDance. That's the parent company that Congress concluded has dangerously close ties with Chinese Communist government. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg Tom.
John, thanks so much. Red and green on the screen right now. The VIX 21.11. We're up a little more angst earlier, I'm going to say, but there is attention to the market. The 10-year real yield, 2.30%. David Gura and Tom Keene in at New York. Thank you. Out on YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. David Gura and Tom Keene. Thank you for joining us across the nation and your commute. All of us still reacting to the bang-up jobs report. On Friday, Anna Wong with a victory lap. She absolutely nailed it for Bloomberg Economics. But there's the but out there, and the but is revisions. Joining us for Revision 2025. Sounds like a tour, Ted Nugent's opening. Help me out here, Michael McKee, on the revisions of the job report. Is it a monthly and a 2-month revision, or will there be a more bigger report at some point?
Oh, the revisions you're talking about are to last year through March, and they will come out in the next report, and that will lower probably the total number of jobs created each month in the year.
Give us a how much in this?
March.
Do we have a clue?
We don't know. The total is somewhere around 800,000 that's going to be divided up by the number of months, and we don't know exactly which months we'll see the biggest declines, but it's something that's pretty well known. That's not going to be the focus for the markets. It would be more of a political focus, except that by that time Donald Trump will be in office, and there probably isn't a lot of benefit to him for criticizing the Biden administration, saying things were overdone.
Mike, on the data-drivenness or the data point-drivenness of all of this, we were so focused on the jobs report going into last week. This week we get new inflation data. How much does it matter as the Fed sort of looks at the panoply of data before it? Again, moving back to the sort of inflation side of the mandate here.
Well, it's going to matter to the markets, probably more to the Fed. The markets have gotten obviously very nervous in recent days. The Fed will not do anything in January. We already know that. So that moves it to the March meeting. And by that time, they'll have the February and March, or January and February rather, CPI reports. So they'll get a much better picture of inflation by the time that they could be trying to make a decision. But here's the interesting thing about the number coming out on Wednesday and how the market might react. I think we created a little chart for you on for those of you who are watching on the millions of fans of Tom Keene watching on YouTube.
That's with an M, millions with an M.
Millions.
Yeah.
Well, we could do trillions with a T. But you know what's happened now is that the 2-year note yield has risen above the effective Fed funds rate. And that does not happen except in times when the Fed is raising interest rates. And so I suspect at this point, we're waiting on the CPI report, and it could continue to push upward for rates. This may be just a little poking its head above the ground, and we'll see, because the Fed doesn't seem to be close to raising rates yet, but it does signal the nervousness in the markets about what might be happening.
Tom, Mike and I were like ships in the night passing in Peggy Collins's Bloomberg DC bureau last week. We saw each other briefly, and I was very interested as I talked to people there, so how they're feeling about the transition that's underway. Curious if you picked up on any of that chatter yourself. And also just looking ahead to Scott Bessent's hearing, what are you listening for? What are you going to want to hear from the Treasury Secretary nominee there when he testifies on Thursday this week?
Well, having been through this many, many times before, I'm not sure that he can give us a lot of information that, A, would be useful or you could trade on, except that he could talk about what they're going to do about the debt ceiling and whether or not they're just willing to let it go, to get rid of it, or how soon they will move on that, because as of tomorrow, that could start to become an issue. So that's something to watch for. And then what are they going to do about taxes? Do they have a much better idea on that? And tariffs, is it going to be all at once or spread out? And I don't think you'll get clear answers to that, but
there we are.
Going to capture people's attention.
Michael McKee, thank you so much. I'm sure we'll speak again in this week. David Gura, are you here tomorrow?
I am.
And
Wednesday.
People, but, you know.
Well,
you're here, and Wednesday too?
And Wednesday too.
Very cool.
I said that was it, though.
When do we see a big take?
Well, there'll be one today. I'll have one tomorrow, I think.
Okay, very good.
Once a
David
month,
Gura.
says
Once
Rich.
a month.
Yeah.
That's about it. The best tweet of the weekend, Randy Newman, the giant of American song. A simple tweet, Randy is okay. Aaron Neville with Newman's Classic.
6 feet of water in the streets of Evangeline. just